Give me just a few minutes here and I'll be up on stream in a minute. I'm a little bit behind this morning. I've got a bunch of crap I got to do for my brokerages. though it's so cold, do we have a lot of pollen? Yeah, it's the same for me. I can't tell if I'm sick or if it's just pollen. Do you have allergy pills or no? Ooh. Sorry, I'm like running around here. Give me just a second here, guys. Oh, sorry about that. The wrong buttons over here. Give me just a second here. Got a bunch of crap I got to do. We have a lot to go over today. We're going to talk about this morning I saw a headline. It's like after the Trump launch. Sorry, I got a bunch of cash here. I'm trying to put into a safe. I had to go to the bank. I try to put cash in this. Like, you guys like save 401ks, pensions, gold, all that kind of stuff. I try to put cash in a safe every once in a while. I got it sitting here in my hands, and I don't like it in my hands. I never like I never like I never see cash anymore. It's like rare. I used to see it a lot in Detroit when I first moved here. Detroit was very much a cash. Yeah, my account is perking up now. It looks good. There is this daily resistance here. Let me check something really quick. Had some wonkiness going on with my numbering. I don't know if it was another 4 right there too. There's a lot of resistance here. What is going on this morning? I got some like serious fucking. I don't know what the fuck is going on with my charts this morning. There and there's a green. There's a 1 hour. 1 hour looks good. Some real like I got some funky shit going on. Like trading view. I don't know if they changed their. Maybe they changed their coding. Maybe I don't know the coding language. Maybe I'm just making shit up. We're kind of stuck in a pickle here. To escape. And there's more gap down below. Still have a sweep down here to take care of. I don't know if we will or we won't. We need to escape this this hourly trigger. We're at a deep place in hourly trigger on 30-minute velo, but we haven't established a series of new lows. So I don't know if we can escape this just yet. Give me one quick second here. We're going to talk about recession risk. We'll start the conversation with. Hold on a second here. I always want to have cash in a safe. It's like having little gold brick bars and stuff. It's like having cases on my family ranch. They keep cases of bourbon. But I don't think it's for trading or barter. I think it's for drinking because you get locked out, like, or you get snowstorms and you can't leave to go to the Costco. Okay, so we're getting closer here where we can start chatting about this. Give me a quick second. This morning I was reading a headline. Well, yesterday, we should say this. We know that we know a few things. We know that Wall Street wants just clarity. I don't think Wall Street cares about what Trump policy is, but they do care about, like write it out. Like, what are you going to do in your first 100 days? What are you going to do in your 4 years? What do you want to do? And we know that what he wants to do is unknown at best. And what he campaigned on and what he proposes now are much different, right? And I don't even think that's an issue. I think it's more just Wall Street just wants an idea of White House policy in general. They're not getting it. So Wall Street basically says, well, if you're not going to, lay out White House policy for the economy, we're going to push for a put in the form of the Fed or you, right? We're either going to, we're going to go risk off until you let us know where we're headed. And that's our pushing you to give us a path for policy, or we're going to force the Fed to do something like that. Now, there's a thesis, of course, being peddled that Trump wants a recession. Now, Trump has mentioned that. Bessent has mentioned that, of course. We've discussed that on the show, that Bessent has brought this up. And Trump has it, as well as Elon, right? There'll be some pain. Could be a year and a half. Now, if you look at it from the trader or investor's perspective, I think we all expect this at some point, right? We've talked about it last summer. We talked about it this past fall, this past winter. We're like, if Kamala Harris wins, we're probably going to get a recession sooner. If Trump wins, it'll probably be later. That was the thesis. And now that thesis comes into question, right? Well, maybe he doesn't want, or his policy won't push a recession off. That's the big question mark. And you saw Barclays yesterday reducing their outlook for 2025. Now, their outlooks, if you look at like a bank like JPM or GS or something like that, they're always kind of like, you're like, if the stock market opens on Gen 1 at $400 as an example, not where we are, just $400, you'll get a projection that's 20% higher, right? You'll get a projection for 480, and it's a safe bet, right? The S&P 500 in a bull run should return about 20% in a year. Does that make sense? They're not going to give you some wild ass projection or going to 600 or anything insane like that. And if they're wrong, they recalculate their projections. Whenever we switch into a bull market or a bear market, usually the beginning of the year projections are inaccurate. They're either, if we're in a bear market, they're lower, and if they're in a bull market, they're higher, and they're pretty safe bets. And these banks also change their projections throughout the year, and they're often wrong. Now, none of that matters. What matters is when they change their projections. Just the act of changing their projections is a question mark. Now, they're usually late to the party too, right? Most of you can recall, like, they'll have low projections, and then the market turns around, it's heading higher, and they're like, oh, wait a minute, 3 months behind. So there's nothing unusual about Barclays saying, well, we're going to lower from 6,600 to now 3,900, and they're kind of late to the party, right? We've already done the downside move, or we should be moving higher, that kind of stuff. And they'll likely change it again if we go higher, right? But it is worthy of noting those changes. When banks change their outlooks, it's a nice little footnote, right? That they're scared, that they're becoming uncertain, I should say. Not so much scared, but uncertain for their projections into end of year. For their clients, right? They under expect and then over deliver is always the way that you want to be, right? Well, I can only give you one, man, or I can give you 10, bro. 3 months later, maybe I can only give you 5, right? Then if you deliver 8 or 7 or 9, you look like a rock star. As long as you're updating an underperform expectation, you should look good. Does that make sense? So it's not necessarily, hey, we're going to trade or whatever. They changed their thing to 59. I think they said 5,900. They lowered it to. So if they outperform at 620, 640 or something like that, they're going to look like rock stars, is my point. But the point stands that Wall Street is uncertain. And you can clearly see if you look at Euro stocks versus the U.S. stock market that there's been a liquidation of liquidity from the U.S. markets into foreign markets, right? Now, yesterday, or not yesterday, but the projections that I had was for us to trade 75 and fail, 75 and change and fail. Now, I want us to trade I wanted us yesterday to trade 78. Why? It's to find out if we have liquidity or not. It's the same on a bottom. It doesn't matter if it's a local top or a local bottom. So let's look at that briefly here in like a black screen if we can. So right here. So if we have price, right? We have what we think is major resistance, right? And what we think is major support on any time frame. Could be a 1 minute time frame, could be a 1 minute time frame, an hour time frame, a week, a year, doesn't really matter. The only thing that really matters is when you're entering either to the upside or the downside, what is the behavior? Does that make sense? I'm hoping this makes sense to some of you. If you're, let's say we're heading down. If we slice right through, that's bad, right? Can all say that? That's not good. Right? If we slam into this bottom and then start puttering around, that's not good, right? We all know what that leads to, right? Bloodbath, right? We also know, let's say price is coming down into a bottom and it never hits. It just ricochets up. We know that's good, right? That's good. That's bad, right? That's bad. And does it matter? Let's say we slice right through. Does it matter if we stay down there? No, it doesn't matter. It doesn't matter if price comes back up. But it's telling you, it's giving you information in that lower low, right? It's telling you that the support may be soft down there. We may be able to head down deeper. Does that make sense? If you catch this bounce, I get the wrong thing here. Let me erase all of this here. Sorry for the terrible drawing. If you catch this bounce before you hit what is you think is support, right? Major support, it means, oh, these buyers are now higher. Make sense? And they're still here. There's an implication that they're still here. And the same thing happens, just go get rid of that, on the upside. So yesterday we know that this is resistance. We know we've got price grinding. We know it's going to roll. What we want to see, though, or what I want to see is, hey, are we going to like poke our heads up there and have a look before we roll to the downside? And why? And the reason is you need to know as an investor, are there buyers here or are we mechanically squeezing? And there's a vast difference between these things. If you have mechanical reasons for the market to go up as it's correcting or rolling down, you want to know, hey, is this bottom? And even if we're going to head back to the downside, are these buyers aggressive, right? Is there liquidity in the market, or is this the mechanical action and we're just heading to the downside? Now, this is barring gamma or puts on the market. We saw that big put bar on I believe Tuesday. We saw that those 2-day puts come into the market to the downside. We know that they are there. So you can explain it away with, hey, it's gamma, or it's puts in the market, or they slam these 2-day puts on Tuesday and stuff like that. But in truth, you are looking for, is there like buyers? Is there like flows coming in from institutions? Are retailers fleeing Europe and they don't give a fuck that you're buying puts? They're ramping, right? Real money buying. Is it there? And yesterday it didn't look like that to me. I'm like, I still don't know if this is mechanical or not. And I think that's a distinct thing for, let me go back over here for you guys. And that doesn't mean that we can't have those real buyers come back into the market or liquidity come back into the markets. But it's an important thing to note that, hey, are they here or are they not here? I think that's a critical part of price. Is price squeezing? Like, is this just a squeeze? And there's some reasons for this. I was explaining this to a friend last night. I was explaining the idea of being in a bull market and a bear market, and I was trying to explain to him, if you have price going up and down, let me delete this. I'm trying to like simplify this discussion that I was having last night with a new trader. And my point was, if you've got price going up and down, right? This is a bull market. And you have price going up and down in a bear market. Bear market. They don't get any A's, they only get E's. So I'm like, you would have, and this is just theoretical. This is to explain a concept. So stick with me on this. If you have in real dollars, you go up $1, $2, $3, $4. Behind that dollar increase, there's likely another $10 in a bull market, $10, even though the price only reflects $1. If you're in a bear market and the market is going up, this is specifically to like options and stuff. So you go up in a bear market, and for every dollar that the stock price goes up, there may only be $1 in here. That makes sense? So $2, right? Now there's only $2 in here. And this is called liquidity, right? Or is translated into liquidity. So if I'm in a bear market and we're squeezing and I buy calls, my calls are less valuable than they would be in a bull market. Does that make sense? And not only that, there's more buyers and sellers of those calls, right? There's more demand than just one person or two people trading those calls. Here, there's 10 people trading those calls. There's 20 people trading those calls. There's 30 people trading these calls. And in here, there's only 4 people, 5 people, right? So do you guys understand that? So option interest, right? Who's interested in these calls? Is it me and 10 other people, or is it me and 100 other people that are interested in these calls? Can I demand a higher price, and more people are willing to pay the price that I want for those calls? And this is kind of where we are, right? Is I'm wondering, hey, are we still going to go higher? And why are you wondering these questions? Because you're either going to be buy side or sell side. In a bull market, when we go down, you ever notice your puts don't pay? You ever hear that? Puts don't pay. And before we get to the turn, the puts are already burning to zero, right? When you should have just been a buyer of the dip on the ups, right? So if we're in a risk-off environment, you just want to be sell side. You can be a little less, it's a little less forgiving. Does that make sense? If you're in a bear market with less liquidity in the market, you're going to be safer on the put side. I own puts, and they're not going down in value. There's interest in those options. And so that's what I'm looking for. I'm like, do we get the 78? Do we get the fail at 75? And is there liquidity here? Is there interest in longing the stock market? And we haven't had that kick yet, have we? And I don't know if I'm explaining this exactly the right way. And I also had this discussion with this trader yesterday. Woohoo, going higher, baby. So I had this discussion with a trader yesterday about keep on cranking. Count is looking great. I'm also having this discussion with a trader. Sorry, I'm going to put some of this stuff on for you. I'm also having a discussion with a trader yesterday about we are entering the pivot point here. We're also on the hourly trigger on SPX. Gamma flip sits today a little bit lower at 58.10. Target is 5,800. So that's 578, by the way. I've got a bunch of 577s, 578s. I've got shit that died yesterday. I got shit on the boards for tomorrow. I've got for Friday. And then I've got calls for Monday, too. A whole ton of them. I got like 577s, 578s. So I was trying to explain a second concept to this trader yesterday. They couldn't understand the idea behind gamma, importance of gamma. And they were like rattling off. Greeks to me, and I was like, I don't know if you understand Greeks. So we're discussing Greeks last night, and maybe we can discuss. I don't know if we should get into that Greek discussion at this point, but I think we should on Monday. We were discussing. I simplified it for them, so I've got this anchor block here. And so I physically said, okay, I am the dealer. I own anchor charging blocks. This fucking thing costs like fucking $50, by the way. This thing is not cheap. It's like one of the best chargers known to man. Charge your phone in like 5 minutes. Anyways, I am the only person with this. Nobody has them. Nobody in the world. I am a dealer. I own anchor chargers. Does that make sense? They're worthless. They mean that they're worth nothing. People own the stock market. They own shares and contracts in the stock market, and normally it's due to protection or wanting to, like, for lack of a better word, gambling. Where we'd use it for gambling, but back in the day, why options were created were for a multitude of reasons. Some greed, some protection. We gamble with them today, right? But the idea being is basically there's 10 people in a room. We all own shares, let's say, in S&P 500. And we want to leverage those shares to make more money, right? With options. And nobody has options, right? I own shares. And then you have a dealer, and they say, hey, man, do you want to sell options, right? Futures on your shares. People want to bet if the price is going to be higher or lower. And you say, yeah, sure, I'll do that, right? What can I do? Can I make money on this, right? I own shares. Can I make some money? And they say, fuck yeah. I just want the ability to possibly take your shares one day. You'll make some money there if you sell these options or whatever. So you go into a deal and you're like, okay, what can I get for 100 shares of SPY? And they go, well, you can get, a bunch of calls, puts, whatever you want to do. And so I, start selling or offering calls and puts, and the dealer now has them in his hand. He's like, woo, we got SPY right now is at 570, right? And I start selling 600 calls, right? So I got, now this dealer's got, 600 or 600 C's right here. And they're worthless. Does that make sense? They're worthless. They don't mean anything. They're not real. It's fake. Kind of fake at that moment. Let's just talk about one of these call options. They have an expiration date on them. They're going to expire in 1 year. Call them 1 year. 1 year, 600 Cs. And I don't need to sell them. They mean nothing to me, right? As a dealer, but one person says, hey, I want to buy from, what do you got, dealer? And you're like, I got these 600 calls right here, right? I got 600 calls. And the dealer says, I want $1 for them. I want $1. Does that make sense? I want $1 for these calls. And the buyer is like, well, I don't want to pay $1. And you're like, well, sorry, buddy. That's what I want for them. And the dealer paid like 50 cents for them. Does that make sense? Like 50 cents, maybe slightly less. I'm trying to simplify this, but he paid 50 cents for them without fees and all this other stuff. And this person says, yeah, you know what? I'll buy them for $1. So I hand the call to you. You're the buyer, right? For $1. And automatically the price of that call goes down to what? 50 cents. The guy that buys it goes, what the fuck, man? I just bought this for $1. Right? And he's like, why is it going down? Even if it's just $1. Let's say I bought it for $1. And I want to sell it back to the dealer. And the dealer goes, nope, I'm only willing to pay 50 cents for it. You need to go out and find someone that's willing to pay more than I'm willing to pay for it. And the guy that bought the calls are like, well, what do you mean, man? I just paid you $1 for it. I want my $1 back. There was like, nope, sorry. So you have to go out and convince people that your call that you bought for $1 is worth at least $1 or more. And you have an expiration. You've got time on this call that you have, right? So you convince someone, you're like, hey, man, look at this. I bought a call. It's for 600 on S&P 500. It's got a year on it. And I bet you can get $1.25, $1.50, maybe $2. Matter of fact, you probably get $5 if you hold on to this thing long enough. And the person goes, well, how much are you asking for it? And you go, well, I want $1.25. And you convince somebody, they buy it from you. Make sense? And so now I'm sitting here with 25 cents in my hands as the buyer. Sweet. I got the hot potato out of my hand. And the dealer's still over there. I paid 50 cents for this, right? And I'm neutral. And the dealer doesn't have to do shit anymore, right? And so this call option goes from hands to hands to hands to hands with people convincing more people that it's worth more money. Now, this call option is like 11 months old. And it's starting to lose value. Why? Because time is passing. The option that I originally had now no longer has a year on it. It's got like a month. And we're not at 600. We're lower still. So the option begins to lose intrinsic value. Does that make sense? And less people are interested with money in this fucking option, aren't they? So the option starts going back down in value. It's dropping down faster and faster and faster and faster in value until you have what's called the bag holder. They're holding this option and now it's worth like $1. Then it races down to 75 cents. And I tried to sell it to a dealer and the dealer goes, nope, I'm not going to give you 50 cents, 75 cents. No, I'll give you, how about 0, right? Or 50 cents or 40 cents or 20 cents or 10 cents. And I have to provide liquidity to the market. And so all these other functions are happening in the background. But eventually this option is once again worthless, hopefully, at the end of its life. And the dealer gets to keep 50 cents, didn't they? They provided liquidity to the market. And they have the ability to control these shares too, don't they? They can take these shares that are optioned out and they can dump them on the market or buy the market if they're short shares up and down to manipulate price. So we were discussing this last night, and the idea that there's zero value in this one option, even when it's created, it's worthless. So anyways, we'll talk more about this on Monday. We're going to do a private stream. We're going to do the real stream on the show here, and then we'll do a private stream in the Discord. We're going to talk about Greeks, basics with Greeks, I think. So, anyways, we were discussing this last night. And so on the same topic or concept, you want to know if we have liquidity in the market. Is it here? Are there buyers here? Is there a herd here trying to buy the market? And yesterday, JPM said, we're too scared to buy the market, or people are too scared to buy the market, or the sentiment is not there to buy the market. Sweet, I'm still doing quite well here. Do we have, is sentiment changed? And JPM yesterday was saying that is not the case. We need more clarity. The public demands more clarity. We're not in a recession, but the people can create a recession over time. Now, we already know heading into this year that the recession has a possibility, or had a possibility, of being pushed off with Trump in office, possibly into 2026 or even 2027. So sentiment is good, right? People enter the beginning of this stock market in the beginning of the year, and they go, woo, we got Trump in office, baby. Maybe we'll get a nice little Trump trade, then we'll get a nice little pump for the rest of the year, and maybe we won't get literal Trump policy until the last 2 years of his office that actually hurts the stock market. And by the way, we might get some volatility, right? So we know already coming into the year we're going to get volatility. We might get some tariffs. We might get some nice blasts down, deeper corrections than expected normally, right? We're kind of due for a 10 to 12, 13% down move. We might even get a crash, but it's going to slam straight back up again, right? That's the thesis. If we trade down 12%, if we trade down 20%, you're going to expect someone to swoop in with cash and buy. Does that make sense? And we're not seeing that, are we? Not yet. So we're looking for that, right? We're like, okay, listen, here's the deal. This is November, right? Here's the deal. I'm going to be a little bit safer in 2025. I'm going to whittle down my exposure in 2025. Maybe instead of me buying some shitco, I'm only going to buy Apple, Microsoft, Tesla, whatever you want. The big boys, the blue chips, the quality. That's what I'm going to do. I'm going to limit my exposure. I'm aware that we're likely going to get corrective moves, possibly even a crash, but we're not going to enter into a recession. The recession will be pushed off until likely 26 or 27. And, okay, so what do I do? I buy the stock market on lows. I buckle up my seatbelt, right? This is all like GS saying all this stuff, and JPM and Larry Williams, all these other guys, they're all like, yep, this is what we're going to do. Let's do it, right? So I'm like, okay, cool, let's do this. So you're expecting deeper cuts or deeper moves to the downside in SPY. You're going to have cash available to buy those major lows with an expectation that sentiment will improve, even if it's in the shitter, right? You're like, okay, so now we got negative sentiment, really negative sentiment. Oh my God, they're in the streets crazy right now, telling us we're going to go into Black Monday, and they're saying recession and depression and all these things. And we're waiting for this sentiment shift. You know, whew. We're putting a tail behind us of volatility, a tail behind us of negative news, uncertainty, and sentiment is flipped on a dime. The sentiment can flip on a dime. It can flip negative on a dime. It can flip positive on a dime. At any time next week, we could be looking at this market next week, and literally the sentiment machine is turned to, hey, everything is fine. Market go moon. The market starts moving. People come back into the market, and it's like the meme with Tony Montana. Is it Tony Montana? It's a fucking football player, right? The guy from Scarface, right? Al Pacino, and everybody's counting money, burr, burr, burr. And everybody's pumped because the market's coming back, and everybody wants in. Your barber and your shoe shine boy and your hand car washers telling you about how they're buying NFTs and they're buying Bitcoin, and did you know about the hottest new stock and all of that kind of stuff? And you're like, sweet, sentiment is good, right? I want to see that liquidity in the system. So that I can buy calls, right, or sell puts, or are we in a no liquidity environment where I don't want to be buying calls? I want to be buying puts, right, and selling calls because there's money in those things. And that sentiment, I don't know if we're there yet. So I was in this conversation last night, and I'm like, I don't know. I was like, we're in this conversation last night, and I was like, I can't tell yet if we're in the sell the rip or buy the dip permanently. Not for a short period of time, but permanently. Are we still in a buy the dip major bottom regime or not? Or are we looking to sell major rips? So if we trade 604, let's say, or we trade, I don't know, 598 or 582, 562, any of those markers, am I in that position of, okay, we're going to continue higher even if we reverse here? Or is this just another opportunity to exit the market? Does that make sense? So there's like two different stances, right? Well, we just hit 82, but we're reversing. But don't worry, the buyers will be there. Calls are worth some money here, right? We're in the buy the dip mentality. Don't worry about it. Or is it, oh shit, they're panicking and they're selling at these major highs? So sweet. I'm doing very well right now. Deltas do look good, by the way, whoever's mentioning that in the Discord. So yesterday we had that JPM conversation going on. We had the Barclays thing going on. And then this late night last night, Trump came out and was still on the, instead of Liberation Day, the Liberation Week tour. And he went on a fucking rant last night about Europe. I want to read some of this to you here so that you're aware of it. And this is, we talked about Europe yesterday. We talked about NATO, EU, yesterday's stream. So if we get Liberation Week or Liberation Day, do we slide right into more volatility? So we bye-bye volatility on tariffs, right? 2 weeks pass and you're like, okay, so Trump's not going to talk anything more about tariffs at this point. Where does his anger shift to next? Likely we have these meetings in Belgium and in Europe. They've been happening all spring, but they come into focus as we head into early summer and mid to late summer with Europe. So I want to read this to you if I can really quick. Then we're going to talk about the dollar afterwards, and we're going to talk possibly about war if we have the time today. So Trump threatens Europe. Put this down here really quick so you can see it. We're going to talk about car tariffs too, if we can get to it. Impacts on tariffs and all that kind of stuff. We might talk about housing too. Make sure I got all this written down. We shift over here. I'm going to write all this down. Tariffs, right? Auto tariffs. Housing. The dollar. Europe threats. Europe threats, auto tariffs, housing, the dollar, and war, I think. Or Cold War, hopefully. Trump threatens Europe and Canada if they band together against the U.S. In a late-night social media post, the president said he would impose large-scale tariffs if Canada and the EU allied to do economic harm to America. He said in the middle of the night social media post early Thursday that he would come after the EU and Canada if they banded together to do economic harm to America, opening a new front in the unfolding trade war. Now, we're not dealing with this yet, but you need to have this on your burner for summertime. This is the setup for summer. Volatility. Quote, if the EU works with Canada in order to do economic harm to the U.S., large-scale tariffs, far larger than currently planned, will be placed on them both in order to protect the best friend that each of those two countries has ever had, Trump wrote. Mr. Trump's post creates a new problem for the EU, which is already trying to respond to his tariffs on steel, aluminum, autos, and potentially a broader array of goods and services. The U.S. is by far Europe's most important trading partner, and the prospect of worse trading conditions has left the EU scrambling to negotiate. But the Trump administration has showed little appetite. Oh, yeah, baby. One up there. We got a little bit of, we want to watch this right here. This is a prior high from yesterday. Getting some nice premium kick here, by the way. This is 11 a.m. They failed to sell here at 10:30. Put that one down there. It's 11. Rewrite this here. I gotta get my time down here. There's one. Make sure that's right. There's one. Back test. One, two, three. Five. The United States is by far Europe's most important trading partner, and the prospect of worse trading conditions has left the European Union scrambling to negotiate. But the Trump administration has showed little appetite to strike a deal so far. Remember, we've got Liberation Day coming up on the 2nd of April. And we're looking for a full, complete tariff package for the world, right? There's been argument that some of Wall Street is asking. There are articles about this. I've posted them for you in the Discord of market participants, banks, businesses wanting a blanket policy for the world. The EU is not in that policy blanket at this point. But the Trump administration has showed little appetite to strike a deal so far. Quote, in the end, as it is said, one hand cannot clap. Maros Savovic, the trade commissioner for the EU, has said. That has left the Europeans seeking to strike new alliances and deepen existing trading relationships as concerns about President Trump's shifting stance on military support have driven partners like the EU and Canada closer together. Canada is already working towards providing industrial support for Europe's rearmament push. That is partially the war thing we'll talk about later. European Union officials did not immediately comment on Mr. Trump's post. This morning, on Financial Juice, Mexico made a statement saying Mexico President. See if we can see some of this from Mexico. Well, she went off this morning, huh? She went crazy this morning. Not crazy, but she went off this morning. We had France coming out and doing some discussion as well. Mexico's president Scheinbaum saying Walmart is to announce investments in Mexico. Trump's auto tariffs go into effect April 3rd. I am working on a thorough response to auto tariffs. This is all the Mexican president. Mexican President Scheinbaum also saying within a free trade agreement, there should not be tariffs. This is USMCA, of course, that also comes under the microscope in June, July. There's a renegotiation moment. Within a free trade agreement, there should not be tariffs. Mexico is efforting preferential treatment in auto talks. The Mexican economic minister Ebrard going on to say Mexico is to inform on steel and auto side letters April 2nd. The economic minister saying Mexico auto exports won't carry brunt of full 25% tariff. Ebrard going on to say we are at the negotiating table with our U.S. Commerce Secretary to protect auto parts made in China. Auto parts won't be changed on every border or won't be charged on every border crossing. And then Scheinbaum coming out saying we'll give an integral response to the U.S. on April 3rd. Fear and greed index maxing out right now, as a side note. She goes on to say it is not that easy for auto plants to move to the United States. Mexico does not want jobs to be lost due to tariffs. Moody's, as a side note, edging closer to a U.S. downgrade. Higher tariffs and tax cuts to boost deficits. So you now have ratings agencies stepping in with banks. You've got banks saying, what are we going to do here? Let's get a put. The Fed saying yesterday they're not going to give the put. Trump saying he's not going to give the put. Moody's now pushing for a put as well with a downgrade. So Mexico saying they're going to or are willing to work with the United States. The Mexican president also stating, I can find this last one here. Washington told EU to brace for more tariffs before any talks. Washington has told the EU it should not expect any trade negotiations before the U.S. has imposed more tariffs on the bloc next week, EU diplomats said on Thursday. So we've got Mexico saying on April 3rd they'll have a response to the Liberation Day tariffs. I'm trying to read through what France is saying now. Macron coming out from France saying Europeans will respond by reciprocating on tariffs. Macron, sorry for saying Macron. Macron also saying we will work with EU on looking at how to protect sectors. I think that's all of it. I think that's everything here. European Auto Suppliers Association, the U.S. decision to impose a 25% tariff on non-U.S. passenger cars and light commercial vehicles is misguided and harmful for everyone, including the U.S. itself. Blah, 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 blah. I think that's all of it. I think I got out through all of that there. So still uncertainty. Still uncertainty with. Slide that over. I gotta check some calls I've got here. Nice push from Spoos. SPY closing the gap left behind. There's another gap higher to 573.45. And then that giant gap at 578 still looms. Now, this is all gap up here, too. It goes all the way up to 580.15. Now, I'm going to read to you. You've got tariff talk, right? Tariffs talk with Mexico, with Canada, with China, with the EU. I have all the countries. There are others, of course, involved in this. But there's an opinion piece here from Brett Arend. And he says, here's the real reason why Trump wants to create economic chaos. And why investors should be more afraid. The Trump administration wants a weaker dollar and lower Treasury yields to pay for tax cuts. A recession could be a part of the deal. So when you're wondering to yourself out there, well, why do we have so much uncertainty with tariffs? Why do we have so much uncertainty from Trump or White House policy? Why? What's the ultimate reason? Why are we correcting knowing that we're getting tariffs, right? So we get tariffs, right? Price in tariffs. We have seasonal weakness. We price in this move that's exaggerated to the downside. We get our 10 to 12% correction. Okay, it's all good. We expect all of this year. Why are we not getting liquidity back in the market, right? We still have uncertainty with tariffs. We have uncertainty with the EU, NATO. We still have discussion on wanting to seize Mexico, Canada, Greenland, all these other places. You've got BlackRock buying back Chinese ports in the Panama Canal, threatening to invade Panama, right? Why so much uncertainty? Why does this uncertainty persist? Why is the money not coming back at the bottom of the stock market? The question remains. The Trump administration may want a weaker dollar and lower Treasury yields to pay for U.S. tax cuts. A recession could be a part of the deal. So what is my goal here? Is my goal to create or manufacture a recession? Well, Werner Antweller at the University of British Columbia's Sauder School of Business, citing the authoritative data tracked by the Organization of Economic Cooperation and Development, the international body for richer and more developed economies, quote, with the exception of the Swiss franc and the Icelandic krona, the U.S. dollar is unusually strong. Antweller tells me this means that U.S. exports are relatively more expensive compared to goods produced elsewhere. It also means that U.S. imports are particularly cheap. The U.S. dollar is currently going through a phase of broad overvaluation. This is essential context for understanding the Trump administration's economic, financial, and trade policies, which economists and financial planners are increasingly describing as, quote, the Mar-a-Lago Accord. U.S. President Trump wants to slash the value of the U.S. dollar against international currencies to make U.S. manufactured products cheaper, both at home and overseas, while making other countries' manufactured products more expensive. Fairly easy to understand, right? You've got also have Mexico this morning discussing manufactured products and also Canada and the EU discussing auto parts, right? Net result for Americans, fewer imports, more exports, and more economic production, supposedly anyways. The use of accord deliberately echoes the so-called Plaza Accord signed by the U.S. and other major world governments at New York's Plaza Hotel in 1985, 2 blocks from Trump Tower, as it happens to end another period of U.S. dollar overvaluation. But there are a couple of major differences this time around. First, nobody so far has signed anything. There is yet no Mar-a-Lago Accord. Second, there may never be one. With the Trump administration, unilateralism is a feature, not a bug. For better or worse, Trump is trying to bring down the dollar through turmoil. If you look this morning at the greed and fear gauge, he's accomplishing that, right? We are like max fear right now. Consumer sentiment has not seen these lows, believe it or not, since the bottom of the COVID market. I kid you not. I'm shocked at that, by the way. That means that it's working, right? Means that we've shifted sentiment to full-on panic, paranoia, doom, and all of that stuff, even if people aren't telling you that. That is what they're feeling. Where will it lead? You place your bet. One of my go-to gurus this week, after begging me, quote, to find a way to quote me so that I won't get murdered in the streets, end quote, said Trump was successfully bringing, let me read this to you again, find a way to quote me so that I won't get murdered in the streets. That's what a guru said when being interviewed by this reporter. I feel that right now. Said that Trump was successfully bringing on an economic recession, is so far successfully bringing on a U.S. economic recession. Now, we're not in a recession right now, but you can see the writing on the wall, can't you? I'm assuming that most of you can start to see things are deteriorating, right? Sentiment is deteriorating. the housing market is beginning to deteriorate. We'll talk more about that in a bit. But Trump is successfully bringing on an economic recession, both to plunge the dollar and to bring down long-term interest rates. This is important. We're going to talk about housing here in a minute. To bring down long-term interest rates. This, he added, was critical to passing his big tax cut bill. The U.S. government cannot afford to finance its massive deficits and enormous national debt at current interest rates. And that is also a topic of conversation right now. We've got Moody's wanting to do a downgrade. We've got lots of deficit talk, right? And we've also got lots of ceiling talks, right? For the national debt, right? The debt ceiling. Now, quote, Trump and the Treasury Secretary want yields down in a recessionary, chaotic environment to justify passing their tax plan, he says. It does appear that he needs chaos to get his tax plan passed. The Committee for a Responsible Federal Budget estimates that making the 2017 Trump tax cuts effectively permanent would add another $37 trillion to the national debt over the next 30 years. It's Pikachu, right? Uh-oh. But another source points out that even as the U.S. heads towards Tariff Day on April 2nd, markets are recently moving in the opposite direction, right? U.S. Treasury yields, after tumbling for the first 6 weeks of the Trump administration, have stopped falling and started rising again. We uninverted the other day, didn't we? The interest rate on the benchmark 10-year Treasury has jumped to 4.35% from 4.15%. And inflation expectations are now rising, not falling. The 5-year so-called break-even rate, which is the bond market's forecast of average U.S. inflation over the next 5 years, has been edging higher for the past week. This despite signs that Mar-a-Lago discord is having its predictable effect on the confidence of U.S. consumers, corporate CEOs, and others. Trump needs a falling dollar, not rising inflation. In this context, it's worth adding that the Mexican peso is almost 20% lower against the dollar than it was a year ago. To the Mar-a-Lago discord worldview, that helps Mexico and hurts the United States. I'm still surprised at how complacent U.S. stock investors are at this attempted revolution in America's financial affairs. Where is the Mar-a-Lago discord discount in U.S. equity valuations? Foreign currencies and international stocks would seem to be better placed to profit, but only time will tell. And so this circles back to, are the buyers here? Do we actually have buyers here? Is this all mechanical? Should U.S. stock prices be lower? Should they be cheaper? And on that front, I want to talk to you quickly about housing. Now, we are already aware heading into 2025 that economic conditions should deteriorate. If we're expecting a top in the market at the end of 2025, right, heading into 26, and then a recessionary environment in 27. So let's say we get a market top end of year, near end of year. Let's say we're trading four. I said that, I typed that out yesterday, 4. Let's say we're trading end of year 625 or 650. So we come into the end of the year this year, we're trading 650. We're going to expect our seasonal sell in the springtime, right? And then we'd expect a failure to regain that high. Does that make sense? So we trade 650 for the year here in S&P 500. We have our seasonal low, and we're going to expect to never see that high again in 2026. And then we'd start to ramp the downside move in 27. Does that make sense to you, any of you guys out there, at least theoretically? But we're here right now, aren't we? We're here saying, are we going to get a new high this year? Are we going to, trade 625, trade 650, or is the recession already beginning? We already are aware that economic conditions are going to deteriorate. But that doesn't really count towards, do we get the new high? Are we risk on to the end of the year or not? And we know that these things move slowly. We know recessions take time, but the cracks are already there. We're already beginning to see some of this stuff out there. I want to read one more thing to you here. This article here comes from Wolf Richter. So the last one was from a different source, but this one here is about the housing inventories that are out there. Now, this is new houses. In the West, inventory of new houses for sale jumps to highest since 2007. That piques the interest, right? Oh, I remember 2007. I remember the late 90s. I remember into 2000, 2001. Bring on the supply of new houses. Prices drop as home builders try to sell the inventory but are still far too high. Inventories of completed new single-family houses for sale in February jumped by 34% year over year. That's pretty big, and by 55% from February 2019 to 121,000 houses, the highest since 2009, during the housing bust, roughly where they'd been on the way up in February 2006, according to data from the Census Bureau today. Now, I want you to note that the Case-Shiller is way, like 3 to 6 months behind this information. This information that you're getting right now we're about 3 to 6 months from having this matter to the stock market. It doesn't matter today, but it is going to matter. Inventories of completed new single-family houses for sale in February jumped 34% and by 55% from February 19 to 121,000 homes, the highest since 2009 during the housing bust, and roughly where they'd been on the way up in February 2006, according to data from the Census Bureau. These are spec houses that were built without buyers lined up. Home builders are motivated to sell this inventory of spec houses quickly because they've sunk a lot of capital into them. Now, if you can see this chart down here, you can see this ramp right here. This is a ramp of housing inventories that have been unsold, new housing inventories that have been unsold. And that number super ramped into the crash of 2009. But we're still not there yet. Housing market is a weird beast. It doesn't matter until it does. And as an example, this is 2006, and it took 2 years, 2 more years for it to matter. Does that make sense? That could say to you, well, we might have 2 more years left as the housing market continues to drop. From the buyer's point of view, and there is another point here too, which is, let me go on with this. From the buyer's point of view, this is a good thing. Bring on the new supply of essentially move-in ready houses that builders really need to sell. More choices, lower prices, and bigger incentives. For the overall housing market, this is also a good thing. It needs this surge of new supply. It's competition for homeowners selling or thinking about selling their homes, including their vacant homes they've moved out of years ago but didn't put in the market to ride up the price spike all the way. But the publicly traded home builders have been singing the blues, and their shares have careened lower from their highs in September. For example, DHI is down 33%, Lennar is down 33%, and KB Home is down 34%. Inventories of single-family houses for sale at all stages of construction in February was essentially unchanged at 494,000 houses, up by 81% from the bloated levels a year ago, and up from 45% from February 2019. Inventories of the past 5 months have been at the highest level since December. Let me just put that up there for you so you can see it better. Highest level since December 2007 during the housing bust. New single-family houses for sale. This is cranking right now. I want you to see this chart right here. This is 2006 where my cursor is. Let me bring this over here and show you this. I don't know why that's, that's so high but you'll want you to see this. This is 2006 here. This is not seasonally adjusted, and we're actually quite closer to this moment of 2006 and 2008. We're ready to start cranking, right? Up here. So we're not there yet, but we're getting close. In the South, new houses for sale at record highs for months. Well, that's a good news, right? Let's talk about the South. If you're from the deep South, from Georgia, right, from Florida, you're from South Carolina, places like that. In the South, inventories of new houses for sale at all stages of construction have been at record highs for months. So there's disparity here, isn't there? At 290,000 to 304,000 houses for sale, having surpassed the highs of the housing bust for the first time ever in May. In February, inventory for sale of 296,000 houses was up by 6%, though, from the already bloated levels a year ago, and by 72% from 2019. The housing market of the South, a huge census region, is dominated by Texas and Florida. See map of the four census regions at the top of the comments. I'll show you that later, as a matter of fact. It's by far the largest market for new houses in the U.S. Just move this over for you here. See if this holds or not. Watch this closely. Let's just check the 15-minute really quick and the 5-minute. See if this holds. We've got a sweep lower down here at 567, 568 on the 5-minute. Here's your 4-hour marker right here. There's your 15-minute. We'll get rid of this one. If this fails, we'll be going down. Taking another swipe at the market, head to the downside here. We've often had up mornings and then bleed the rest of the day and then ramp the close, so just be aware of that. Still undetermined. $568.56. Let's see if we can dip this down here a little bit more blood down here. They're going to try to flush 56, 568.56. There. Maybe slightly higher. About there. Massive incentives and lower prices by home builders have stimulated sales. In February, sales were up 18% year over year in the South, and supply dipped to 7.6%, but this was still 38% higher than in 2019. And this is not quite negative here. If you look at this chart down below, there's a lot of demand for houses in the South, not necessarily negative. But it is worth noting that the supply of housing in the South is now higher than the supply that was available in 2008. If you live in the South, you've probably seen tract homes being slammed up as quickly as possible, anywhere and everywhere possible. In the West, inventory surges to the highest since December 2007. Inventories of new houses for sale at all stages of construction rose to 120,000 houses in the West. God damn it. Sorry. I'm looking at my account right now. I'm like, fucking this bleeding bullshit. I mean, I'm serious. Like, I'm buying shit down here, too. And this is the pain trade right now, just a heads up. Inventories of new houses for sale at all stages of construction rose to 120,000 houses in the West, the highest level since 2007, and up by 10% year over year, and up by 60% from 2019. The market for new houses in the West, the second largest in the U.S., accounted for 24% of the U.S. inventory of new houses and for 20% of U.S. sales of new homes. But sales in the West fell by 14% year over year and by 25% from February 2019. Supply in February rose to 10 months, the highest of any region, up by 28% from a year ago and up by 80% from 2019. Home builders need to sharpen their pencils to get this inventory moving. Dangerous, right? The West is dangerous right now. The other two regions, the South and West combined, accounted for 84% of new house inventory and 86% of new house sales in the U.S. They move the needle. The Midwest, that's where I live, and the Northeast carve up amongst themselves the remaining 16% of the new house inventory and 14% of new house sales. Some of the big states in those regions have lost population over the years. That's me. We've lost population where I live. The cities are already dense and huge, and big new developments are not a big priority. Inventory in the Midwest remained for the fourth month in a row. As a matter of fact, Chicago's the same way. Chicago's been steadily losing their population. I don't know if you're aware of that, but that is the case. Target's right here in this yellow bar. Sales at about 6,000, inventory in the Midwest remained for the fourth month in a row at 47,000 new houses for sale, up by 9.3% year over year and up by 15% from February 2019. Sales at about 6,000 houses in February were down from a year ago, but roughly the same as in 2019. Supply remained at about 8 months. Caution with these small numbers of sales. Consensus rounds its sales estimates to the nearest 1,000. These 6,000 sales could mean anything between 5,500 and 6,500. The Midwest. So we're actually pretty good here. The Midwest looks really good. It's not so bad here in the Midwest. And I can attest to that. The housing market where I live is very stable and rising. And we've not felt any kind of, not that I can see, any kind of like, hey, we're leveling out in our home sales or we're giving discounts to buyers, anything like that. We're not feeling that any of that here in any way, shape, or form. Inventory in the Northeast rose to 31,000 new houses for sale, up by 19% year over year and up by 11% from February 2019. Sales of about 2,000 houses in February were down from a year ago, likely the bad weather. Supply remained, nice. We also have more targets down below here. What's that beeping? Hold on a second here. Getting beeping here. I don't know what that beeping's from. Hang tight here. Give me a second here, guys. Let's see if they buy this here. We really want to see if this gets bought. If this does not get bought, we're going to blast to the downside. This is kind of like it for the bulls here. Last chance here. We'll swing down much farther down. We're going to swing down to the next target lower is 560. 568.49. We already tagged that one, right? Hold on, I got the wrong one. 566.81. Way down there. Still holding for right now. Inventory in the Northeast rose to 31,000 new houses for sale, up by 19% year over year and up by 11% from February 2019. Sales of about 2,000 houses in February were down from a year ago. Likely the bad weather. Supply remained at about 8 months. Even greater caution. There are minuscule sales figures. Yeah, as a matter of fact, expect a nice rip up here. About there. A little bit lower. Even greater caution, there are minuscule sales figures rounded to the nearest thousand. The Northeast single-family home sales for sale, this is the chart for it. It's closer in line with the Midwest. U.S. sales dip year over year despite price cuts and incentives. Sales of new houses at all stages of construction rose in February by 1.7% year over year. That's positive. To 59,000 deals, not compared not seasonally adjusted, driven by the sales increase in the South that more than made up for the drop in the West. There's a reason we're getting to this here. Oof. I'm going to sweep that whole thing right there. There's your 4 down there. Sales of new houses at all stages of construction rose in February by 1.7% year over year to 59,000 deals, not seasonally adjusted, driven by sales increase in the South that more than made up for the drop in the West. So the South is helping the West. Compared to February 2019, sales were still down by 6%. These sales are based on contract sales, not on closed sales. Things can happen that prevent contracts, not on closed sales. Things can happen that prevent contracts from closing, such as not being able to get affordable insurance or financing falling through. Home builders overall have been selling houses at a slower clip than they've been building them, which is why inventory levels of new houses for sale in the U.S. overall have continued to surge. So we've got a glut of new home sales, but homes are selling, just not new homes. Supply at 8.4 months was up by 6% from a year ago and by 40% from February 2019. Thanks to the incentives, promos, lower prices, and mortgage rate buydowns, sales of new houses have held up at decent levels, though they're nothing to write home about. While sales of existing homes experienced the worst February since 2009, February 2009. So I want to show you this here really quick. This chart right here is coming back. I wanted you to, so this is like bad, but there's a bounce here. So we've got a bounce taking place in older homes, but not newer homes. Sales of completed houses rose 16% year over year in February to 29,000 houses, and were up by 26% from February 2019 as builders have given up profit margins. Some of the biggest have given up 2 to 4 percentage points from the fat margins a few years ago to aggressively sell what they built. So there's discounts right now in new housing. And it looks like it wants to get violently even cheaper. We're in a pretty big downstroke right now this is new home pricing, up, down, and we're making a violent downside move. And this is implying here that by 2026, 2027, new home price sales should be cheap. Well, that's the expectation, right? So if you're looking and if you were like, hey, I want to buy a new house, right now the trend is by 2027. And if we do this Trump recession early and not later, you would expect to maybe be able to buy. You would expect. We're going to go into this in a minute because we have to pass a tax cut bill, right? And we can't do that if rates are high, can we? So median price wobbles along below the 2022 peak. Ooh, they didn't even wait for this. They're just blasting it down right now. Just ripping it down. The median contract price of new single-family houses at all stages of construction that sold in February fell to $414,500. These are all those tract homes that are, hey, we want $1 million. Hey, we want $500,000. We're down to $414,000, down by 10% from the peak in October 2022. January's originally reported spike to $446,000 was revised down to $427,400. The 6-month average, which irons out the random volatility and the revisions, ticked up to $417,300, below where it had been in October, back where it had been in April of 2022, down by 1.5% year over year and down by 5% from the peak in late 2022. That was the peak of the housing market in a lot of senses for new housing. In recent months, it has been roughly stable. But note, these are contract prices that do not include the costs of the mortgage rate buydowns, which show up on builders' financial statements and gross margins as a cost, and certain incentives such as free upgrades. So these median prices are not a great reflection of how aggressive actual pricing, including mortgage rate buydowns and incentives, is in the market. You can see it right here, peaking out here in 2022, now sitting on the edge. And this is unknown if this is consolidation or consolidative, or if we're going to see crashing home prices here soon. Now, if we look at this, are we going to consolidate? You're going to see new home prices crank, or are we going to begin to see a deterioration in new home prices to the downside? And inventories right now are still building up. It's not like we're short on inventory, which does not lead to positive feelings, does it? Now, again, the housing market is not going to mean anything to the stock market today. It takes time for this stuff to matter. Let's take a look at here at Bookmap. Hold on here. See how far down to the depths of hell we can go. Hold on here. I've got my, I use tissue paper to clean my glasses, and I had a roll of it sitting over there. I just want you to watch this down here. There's a target lower than this morning. Another sweep lower down here. We want to see if we can hold this bar up here. Got one more target right down here. This is the low from the open this morning. Let's see if we can hold this bar here. Right about there. See if we can hold this here. Climbing back up again. And that's that yellow bar right here, just so you can see this. Bulls need to hold this bar. If they cannot hold this bar right here, we're going to blast down. Target is 566.14. We also have another target lower way down here. That's that put wall and all that kind of garbage that was left down there. Just want to watch this price action here. Still haven't given it up yet. Price still holding right now, still bullish. Now, there's a bunch of discussion that went on inside of this article that I thought was fascinating. I'm getting dogs barking in the background. Let me make this slightly smaller so that I can find the commentary. Yeah, Wolf goes on to say, how many new houses do you need to sell when the population stops growing or is in declining? This is a discussion about the Northeast and the Midwest. In theory, none. It's a question of demand, and there is no demand, which is why there are so few houses sold. Inventories are rising even in the Northeast, which means builders are building more than they can sell, which is a sign of slow demand for new houses. Another commenter said, time to return to ZERP and get this inventory moving. Wolf Richter said, time to lower prices further and get that inventory moving. So if you're looking at that price consolidation and prices coming down overall to $414,000, you're going to expect at this point, if nothing happens, if we don't get ZERP, right, you would see home prices fall over time between now and 2026, 2027. And this is where the crux of this story is. So I want to read this portion to you because this is what ties into Trump wanting a recession to pass his tax cuts, make them permanent, right? Raising the debt ceiling, all that kind of stuff here. And what I want to read to you here is what was some commentary that went. This commentary was from Bubba. It says prices are still this high with all this inventory. Wow. When the Fed lowers rates, house prices are going to moon. And we talk about the Fed put and the Trump put. We talk about Moody's wanting to push a Fed put or a Trump put. We also had Kashkari yesterday saying, well, we've got 2 cuts possible in the books, but you might catch 1 or 2 of those in a year or 2. We also know that the Fed's put is likely closer than farther away, theoretically, right? We're like, yeah, you know what? The Fed put is probably at 510, and the bottom of the market's 553. What is that, 300 points? We could trade that in 3 days. Get down there, catch a Fed put. Not so fast, right? We don't want a Fed put, though, do we? Or Trump wouldn't, would he? Or would Trump want a Fed put? Richter goes on to say on this topic, when the Fed lowers rates further, mortgage rates will spike, as we have seen. The Fed cut by 100 basis points and mortgage rates spiked by 100 basis points. So the market is like, make my day. Maybe the Fed should try hiking rates to see if that brings down mortgage rates. Now, I think that's kind of like shocked Pikachu moment as well. We're all sitting here going, where's the Fed put? Are we getting the Fed put if we hit 510? Right? And Wolf Richter's saying, well, if you really want prices to come down, and like, what do you want? Do you want mortgage rates higher, or do you want housing prices lower? Which is a big question, right? And if we've got Trump wanting to pass his tax policy, right? The Trump administration wants a weaker dollar and lower Treasury yields to pay for those tax cuts. Not higher yields, lower yields. So kind of a crux of a position here, isn't it, for the housing market? You would think that Trump would want a recession, right? That he would want prices of these new homes to come down. And these homes are right on the precipice right now. So even if we are expecting, let's say, new highs in the stock market or lowering our expectations this year in the stock market, depending upon the flavor that you have, we're setting up a recession one way or another, aren't we? Whether we escape it until next year or it begins to happen now. You can already see it in where? The housing market. It doesn't matter yet, but it's going to matter, isn't it? It is going to matter. And you're not going to get your tax cuts if we have yields going higher, will you? On those 10s and 20s and 30s. SPX Gamma sitting on support right now, just as a heads up. There's still some gaps lower at 56.59, but we are sitting on a positive gamma bar at this moment. So just look down below here. Move this down here so you can see this chat down here, but I want to bring this larger for you. Just be careful of a squeeze. There's a ton of demand right here, just so you can see it. Let me know if you're in puts here. Say it on the chat. This is very dangerous for put holders. Well, it's not dangerous. It becomes easier for put holders below 5,700. Not quite there. I think 5,700 is right here. I think this is that 5,700. There's a lot of squeeze danger here. The U.S. has paused payments to the WTO, saying Reuters is saying. This is coming from GS2. The EU Council was held on the 20th of March, and it is underwhelming. Scheduled for 2 days, it was cut short to one. There was a lack of agreement on fundamental issues, how to get Europe represented in the peace talks, the fundamental definition of defense, Spain and Greece wanting to fund increased protection of borders in the Med, lack of agreement on the definition of Buy Europe, with UK and Norway or not, and no approval of the SAFE program. That's the Security Action for Europe program. The failure to approve an additional $5 billion of immediate military support for Ukraine as well. Macron going on saying, we decided to mandate foreign ministers to come up with proposals within weeks on how a Russia-Ukraine ceasefire could be monitored. Reassurance force for Ukraine will not be peacekeeping force or on contact line, but will comprise several member states based in strategic areas. No unanimity between the partners on reassurance force, but not needed for someone to go ahead with. My God, this sounds worse than the UN. Like, what the fuck is that kind of a force? Like, the UN is toothless already. Now they want something even less toothless, where they'll hole up in like a base somewhere and never come out. Elon Musk came out this morning and said, important to note that Tesla is not unscathed here. The tariff impact on Tesla is still significant. We'll talk about tariffs here in a minute, auto tariffs. HSBC lowered their target on Tesla to $130 from $165. That's what I had, $165. So they're now lowering their target even lower. Just a note on this, HSBC Securities lowers their Tesla target to $130 from $165. Just a note, Tesla needs to hold $165. If Tesla does not hold, if you're a Tesla bull out there watching this program, I guess you could trade $130, but like $120, it gets messy for Tesla. The seeds for the current quote, the seeds for the current sales weakness predate the recent brand issues. Slashing its list prices in December put European fleet buyers offside, a significant issue given that they represent 60% of the new car market. Aging products within limited driving assistance have been an ongoing headwind in China, and although the new Model Y should help, the refresh in the Model 3 back in fourth quarter 2023 saw a relatively short-lived benefit. Tesla eschews many of the industry norms, holding list prices firm, making regular facelifts and model renewals, and has to date seen only minimal impact. But tougher competition and brand erosion is likely to see the impact of its strategy hurt more. Management was clear that Q1 would be tough given all factories would switch production to the new Model Y in a matter of weeks. The media suggests that the sales issue is not just the Model Y changeover, but it is hard to tell. If March sales represent the usual portion of Q1, then first quarter 2025 volumes look to be coming in at about 385K, C4% below current VA consensus. However, if the month records the same proportion of Q1 as last year, then volumes could be as low as 343K. That would assume no boost from the new Model Y, which is probably unlikely. We suspect the messaging at Q1 will be that the issues are temporary and the future remains bright. We doubt brand issues will be discussed. Are you in puts right now or shorts? Because you might get blasted here. We got a little bit of a bar above here. Buyers stepping in on a 15-minute basis. Watch out for a major squeeze here to the upside. Not major, but like here. It's still looming here. It's this one right here. Also note this bar here is being held. I'm going to turn this green for now. So some erosion out there, right? We've got erosion of the economy. Does it matter to stock market price today? Possibly not, as long as we hold this bottom. Or even if we squeeze lower, I don't think that it's permanent, that we still swing higher. So if we have that doom trade to the downside with Trump uncertainty. But just note that the economy is not looking good, right? And then we have active, we have White House policy actively trying to speed up the process of a recession. So if we're looking towards a recession next year, the beginnings of a recession next year that carry over into 27, possibly 28, there are forces in the market attempting to accelerate this erosion of the economy. So does it matter today? Probably not. Still doesn't matter. Housing prices are coming down, and they normally don't matter until they're on fire. And you got to think about this. Let's say you've got a house that's in the peak of 2022. Now this is a new home sale that's being offered for, let's say, $500,000, right? Yeah, I wouldn't be short here. No fucking way. Not at 5,700, or not yet. SPY squeezing to the upside right now. So you got to figure here that, think about this. If you got a house that's $500,000, right? I buy it. $500,000 house. I'm sitting in my house today, and the new house next to me is worth $414,000. I'm fucking pissed, right? I'm like, oh shit. I could have owned this house next door to me for $414,000, right? I don't even want to think about the interest and the insurance and all the other shit. But it does begin to change my my sentiment, doesn't it? So now you're beginning to see an erosion of not just sentiment for politics, but you're beginning to see a sentiment erosion from real people. Forget their politics now. There's a guy on one street somewhere going, oh, fuck me, man. My house is worth less. Well, I'm going to be in it for 20 years, so it'll come back, right? And I don't mind eating this right now. It's not going to be forever. We're going to get a Fed put, aren't we? And we're going to get a Trump put. And, Trump, this will pass in a year or two. So I feel good about all of this. Now, so that doesn't matter right now. But if in 2-3 years, let's say that same house starts careening lower and lower and lower and lower, let's say you got a $500,000 house that's now going for $300,000, maybe lower. Let me look at some of these prices one more time here. Let me just check these prices, because this last figure here was juicy. And why am I asking this? There's an ultimate answer here. When you're going to buy houses, you know when to buy them. Usually in recessions, usually at the tail end of a recession after prices have come down, you're cash rich. Your money is not in the stock market, and you have to say, well, what am I going to do? The stock market hasn't risen with big profits, right? If we're going to expect a recession to last a little bit longer, or economic activity to be lower, or what? The deficit to come down, right? And all of those things, we may have what? Reduced returns from the stock market. So let's take a peek here. If we look at this one more time, this chart here is the rise in new home prices This is $320,000 down here. This is back in 2017. Move this up and over. These are new home prices in 2017, $320,000. These bad boys start cranking down here, whoop, to normalcy again in 2027. Not a bad little juicy dip buy down there, is it, for home prices? So if you wanted to buy a home or a new home, I mean, what is this thing gonna? What are these homes going to be? 3 years old, or 3 years old, maybe 4 years old? Probably even have some of their problems worked out of them at that point, right? Some other schlep that bought it for $500K. It's probably like, shit, they fucked up the insulation. There's gaps all along the wall. I had my buddy come in and he put his heat gun up there, and so I had to go in there and fix all this crap. My cabinets were cocked to the side, so I had all those things fixed. They had builder grade tile over here. I improved all that, and yet my house now is worth, 40% less than I bought for it. And by the way, I just got laid off. My wife just got laid off, all that kind of stuff, right? That's not good, right? And now you're competing all of a sudden, trying to get out from underneath your mortgage before you go bankrupt. Right? You have this cascading effect all at the same time. So do these house prices matter today? No. But can they matter in 2 or 3 years? Especially if we have Trump attempting to fast forward a recession. So if you are looking for a place to move your money, so if you're in the stock market right now, let's say like me, right? And you're like, well, where do I move my money next? We're going to have to change this show to, instead of the stock market show with Captain Jim James, we may have to switch this show at some point in the next year or two to Captain Bear James, where we change to what? If we have no liquidity and call buying, we would be sellers of the market together, wouldn't we? For a year or two and make a bunch of money that way. And then we would also become, the Captain Jim James real estate show, maybe? We'll do real estate Mondays in like 2 years or something. And we'll start looking at all these suckers that bought homes at $500,000. Well, welcome to Georgia. We have a fine specimen $1 million tract home now going for $600,000. Let's see if we can buy this bad boy and rent it out to one of these guys that can't afford it. They're forever now a renter because we've manufactured ourselves a recession. So, moving through this discussion this morning, if you are a stock market participant, if you're in CDs, and if you're worried, if you're anxious about where the market is going, is this a top? Is liquidity going to come back in? Is it safe to be buying these bottoms? It probably is. Probably safe to be buying jackknifes down. If this is the actual bottom, if we jackknife down to even 510, you're likely going to see a bounce. We're not quite in recession yet, even if Trump is pushing it. Can we go into recession with Trump pushing it? Yes. Should we expect a recession? At this point, I would say yes, firmly. From the actions of White House policy, from the actions of Secretary of Treasury, from the actions of the Fed, from the actions of people, not just their politics, but now you've got some guy who owns a house that he bought for $500K that's now worth $414,000. So you're starting to see that sentiment shift. So that risk is likely there. If you're a stock market participant like I am, you should be getting excited about the possibility of unloading some of that doom from a homeowner or even a commercial real estate owner. Now, it's tougher to get the commercial real estate out of their hands like I don't know if you guys know this, but retail residential home buyers are always at risk of losing their home loans. It's far less common for a commercial deal to fall through. Banks are way more willing to work normally with commercial real estate holders than they are with a residential real estate holder. I don't know if you know that, but I would still be looking for that stuff as well. I personally prefer commercial real estate than residential real estate, but residential is much easier to get involved in. If you had some places in the U.S. to be watching, where are they? More than likely, where? The West, of all places. The West looks terrible right now. And you have this giant sucking sound, right? Wherever you live, you might see a lot more Californians. You might see a lot more people from the West saying, hey, I'm out of here. Can't afford the prices anymore. So you might even have some of your best deals coming up in the next 2 years in the West. It's kind of fascinating because I moved to the West when it was cheap. And then I left the West for the East or the Midwest when I was old. So you may want to begin to look again in the West in the coming years as the West or the Midwest begins to mature, which it actually is maturing right now. It's not quite there, but it almost is. So if you're interested in where to put your money, if you're scared, you're like, hey, next couple of years, what am I going to do? Am I panicking about a top in the market? There is a fair chance of us hitting a recession sooner than later, not later than sooner. So if you're looking for that place to exit liquidity, I would keep a close eye on this housing market. And the fascinating part about this is it does not matter to the stock market. Not only does it not matter to the stock market for a longer period of time, then all of a sudden it matters. But the data doesn't matter to the stock market for like 4 months. The Case-Shiller, which the stock market uses, lags like 4 fucking months. It's almost like you've got an insider's view or information on this stuff. Let me read some of this to you. Some of this about how Wall Street views housing. The Fed, how they view housing. Wolf goes on to talk about, here are 5 reasons I stopped using the Case-Shiller Home Price Index. The Case-Shiller Index only covers 20 cities, so it has a 20-city index that underweights Texas with only 1 market. It outweights California with 3 markets and lacks other big markets entirely. You guys still in puts? I hope not. We're squeezing higher right now, coming back up into this 4-hour bar. We'll see if we can get some continuation to the upside. You guys still in poots here? The Case-Shiller Index, such as Philly, so the 20-city index exaggerated the housing bust price decline because Texas didn't have a housing bust. Let me read this to you again here. The Case-Shiller Index only covers 20 cities. That to you there. So it has a 20-city index that underweights Texas with only 1 market, outweighs California with 3 markets, and lacks other big markets entirely, such as Philadelphia. So the 20-city index exaggerated the housing bust price decline because Texas didn't have a housing bust, but it was underweighted. So the 20-city index is not a national index, and do not confuse it with a national index. If any of you live in Texas specifically, This is a 15-minute bar right now. Watch this closely. We'll see if this rejects or not. I want you to watch this one right here. Watch my down chart down there. And watch that big yellow bar up there. And there's a big bar right here. Watch my cursor. I want to see if we can, hold on here. Slap up here, come down, and then slam higher. Okay. Watch that closely. If you live in Austin, Austin used to be a place where people got priced out. You couldn't afford to live in Austin. There was this big thing where Austin started to grow too, right? Remember, Austin was like just big, boom, boom. They were trying to do their infrastructure on their highways and transportation, and it was a struggle to live in Austin. Austin started building rapidly, and housing prices actually got cheap. You can move to, or I don't know about today. I haven't looked recently, but the last time I looked in Austin, this was like 3 months ago at the latest. You could get a fucking brand new apartment condo for like $1,000 a month. That's dirt cheap. This is a metro hipster, people want to be there kind of place, and that is fucking dirt cheap. I'm sorry. If you go to Chicago today, right? You go to Chicago, go look on Chicago Zillow. Look up like 2-3 bedroom apartments in the city in a nice neighborhood. That shit's like $5-6 grand. It ain't cheap. Not cheap at all. No way that's the pricing like you would see or Chicago or San Fran or New York, any of those major hubs, even Seattle. You want to live in a nice place in Seattle? Big, big, big through the roof. So, number 2, to fill the gap for a national index, the Case-Shiller adds the data from the FHFA House Price Index, which is based on prices for mortgages that have been securitized by Fannie Mae and Fannie Mac. It does not include data from sales where Fannie and Freddie were not involved, i.e. cash deals, jumbo mortgages, VA mortgages, etc. And you would be shocked this is not in here, but you would be shocked at the number of cash deals being done today number of cash deals being done today. If you look at how many people actually own their houses with cash and no mortgage, it is ramping right now. More Americans than ever since World War II own a house with no mortgage. This is a product of 2008. This is the Dodd-Frank bill. This is all of the protections that are put in over the years. There is a case that can be made today. We're going to circle this right into right now, trying to create a recession. There can be an argument made today that the decades of consumer protection, you notice how we see erosion of consumer protections right now? You guys notice that? They're eroding consumer protections. If you look at consumer protection since 2008, those protections have literally made a more robust consumer, a more resilient consumer, so that they cannot take on new, bad, crazy debt. You can see that too in boomers, right? They own tons of houses. They're rich, right? They're doing great. They can't be washed out of the system, as naturally occurs in a capitalist society. If you can't create a depression or a recession, you may have to manufacture it, right? You need to be able to wash people out of the system, either through bad policy or manufactured washing of people out. Do you understand what I'm saying here? So you don't want to hear that, I bet. If you look on your triggers and velocity, when we were in 2019, we had peaked in velocity on higher frames. We had peaked on monthly, weekly, monthly, quarterly and 6-month velocity and started to roll, right? The market was going to bloodbath whether we had COVID or not. That's a kind of a shock, right? It doesn't matter if COVID came or not. We were headed towards a recession. And we assigned it to COVID. Or maybe COVID amplified it, but the market was already ready for a drop at that time. And our market's getting there right now, isn't it? You start to look at higher frame velocity. We're starting to lose velocity on higher frames. So this FA House Price Index is systematically skewed to Fannie and Freddie mortgages. It is systematically skews the CS index. To include this data is unforgivable. And for that reason, I have never, ever used the National Case-Shiller Index. Put this right up here for you. If you're a bull, you want to be holding this and this line right here. It is shocking right now the number of cash deals that are done buying homes. If you ever have a chance on a weekend, spring is almost here, right? If you ever have the chance, you should take the time to go to an open house this spring. Oh, it's gone. Yep, we might be losing support here. Just check this really quick. See if we're still on point here or not. Nope, 15 minutes trying to sell us down. We didn't catch the new high. That's not good. Let's check this on a 5-minute. We still got a little bit more here. It's right here. We still got a little bit more before we get doomy just yet. Not quite yet, bears. If we hold this, we're still going up. Give it just a few minutes here. We want to fail this high and fail this low into this half hour. If we fail the high and catch the low, we're going to go downtown. You want to get real aggressively bearish right there. The CS indexes for the 20 cities are available only as index value, with that value set at 100 for year 2000, and not as dollar prices. So by looking at the index of each city, as I do, you have no idea how expensive they are in relationship to each other. The CS, this is Case-Shiller, was invented by 3 guys at a university in 1991 on a shoestring. It was a huge advancement at the time over median prices. This is still bullish. Don't be messing with this yet if you're a bear. You want to see the rejection of the high in the half an hour and a new low in this half an hour down here. This is a trap for bears and bulls. Don't mess with it. The Case-Shiller was invented by 3 guys at a university in 1991 on a shoestring. It was a huge advancement at the time over median prices. The 3 guys, Case and Shiller, being the 2 lead guys, formed a startup company and commercialized the index, then sold the company. It has changed hands several times since then, and now is part of the S&P. Neither the prior owners nor the S&P invested in the index to gather data on more than 20 cities and to use modern data collection technologies, so it has been left behind. By contrast, Zillow has invested billions of dollars to build its database of all homes. and it continues to invest in it, which it's not perfect, by the way, the database of all homes. We know that, and it continues to invest in it. The database contains everything: property tax records, MLS records, data from the local Realtors Association, especially useful in Texas, which is a non disclosure state, data from Zillow postings, pictures of properties, transaction histories, etc. It has everything the CS has: sales pairs, plus a gazillion more data points on individual properties in all markets. The CS uses an algo to weight the sales pairs. That is also the shortcomings of the sales pairs method. You have to assign weights to the sales pairs depending upon when the prior sale occurred. For example, a sales pair where the prior sale occurred a year ago is weighed heavily. A sales pair where the prior sale occurred 20 years ago is weighted much less. These algos are decisions and not current market conditions. With the sales pairs method, there is no way around these algos, but these algos are just human designed algos. And so part of what you're seeing is the calculation of these algos. And I've seen it produce some strange results. Number 6, this is the one that is important to you. The Case-Shiller lags 3 to 4 months, which is unforgivable with today's data gathering technologies. It's just outdated. And that is the key here. If you are looking for, hey, are we in a recession? Hey, is Trump going to be successful? Hey, is there actual data showing you that we're in that recession? One of the good ways to check is inside of what? Not the Case-Shiller index, but likely other reporting indexes like Realtor.com, like Zillow of all places, and not Case-Shiller, and can give you an edge in the stock market when Case-Shiller is going to actually matter. When that data comes out and everybody panics and freaks. You've ever heard the adage that stock market news doesn't matter unless the stock market cares about it, right? You might know something's going on, but until the stock market says, oh, we checked that data point and it's bad, then it actually matters. Next up, we're going to look at auto tariffs on Trump's quest to rein in or ring in a recession. I always find that fascinating. I want a recession. You're not the only one. There's people out there with political leanings that want to see it happen too, and they don't realize that Trump wants one at the same time. Auto tariffs. Where is my auto tariff article? Man, I get up too early in the morning. Did I get the good check mark here? And I'm going to bring this up, maybe. See if I can figure this out again. Having some technical issues here. Hang tight. Can the bulls hold here? Not looking pretty. Just a heads up out there. We have a cross from above of the half an hour trigger up and high. It's not looking good here for the bulls. You got the squeeze higher. Got the squeeze higher, got the new high. That's good. Still holding support. Watch this closely to see if they get this low and then this low down here. Still holding right now. This shit's going to bring blood if they lose this. We will trade 566.7, which is or eventually way down here. Not there yet, though. I'm going to watch this price here in this bar. Note, though, that on SPX, there is a half-hour trigger about to cross the hourly trigger on SPX. It's looking pretty fucking bearish. They will want to trade here 566.8 and 556.50. This is where that gamma is right here. This is the oh fuck moment over here. You're a bull. You must hold this. What am I looking for here? Auto tariffs. Here we go. Now we've got the gist here that we have an eroding economy. That does not matter today, but it is going to matter down the road. We see the precipice that new home sales are sitting on, right? We could get cascading home prices dropping. We know that we think that there is an active administration trying to bring on a recession. right? Actively wants to accelerate a recession. We also know that we have market participants that are uncertain. We know that banks are uncertain on what policy actually is. We don't know if that uncertainty is true now, do we, from the banks? They probably know what the intent is from Trump. That he does want to bring on a recession. The question then becomes, can he accelerate a recession or not? JPM cuts its price target on General Motors and Ford Motor Company, warning that newly proposed tariffs of 25% could wipe out the bulk of their global profit. The former U.S. president said Wednesday his administration would impose a 25% tariff on all foreign-made vehicles from April 2. Analyst Ryan Brinkman lowered his price target on GM to $53 from $64. You saw the hit that GM took this morning, and it stuck, didn't it? Like it got hit yesterday, and it was bloody this morning, early morning in trading. While maintaining an overweight rating, he also cut Ford's target to $11 from $13, reiterating an overweight recommendation. Ford has had an outstanding year, by the way. They've just been cranking the entire year, or at least from March and higher. Early Feb, early March, it's been cranking to the upside. We estimate as much as $14 billion cost to General Motors, amounting to an essentially all of its global profits, and a $6 billion cost to Ford, amounting to greater or lesser than 75% of its global profits. We already know that new car prices are through the roof, don't we? We know that the ask from, if you go to a new car lot today, they're still asking, what, 6 figures for some of these cars, right? They've been profits maxing, right? Fuck you, we ain't selling you that car for cheap. We're selling it for 6 figures. GM manufactures 52% of its U.S. sold vehicles domestically, with 30% coming from Canada and Mexico and 18% from other regions. Ford produces 77% in the U.S., 21% in Canada and Mexico, and 2% elsewhere. Shares of GM dropped 6% in pre-market trading on Thursday. Now, it was fascinating to see that Ford had held up this morning. GM did not. It blasted down and never recovered. Now, if you take a peek right now at GM at this moment, it's recovering. Now trading $47. Take a peek, if you will, at GM on a 15-minute basis. There is an attempt here to buy this stock from the depths of hell, where demand has been around that $46 mark. Ford, on the other hand, this morning squeezed higher in pre-market to trade $10.50. Then it began to blast down. Any of you inside the Discord, I posted for you in the Discord, I said, fuck this, I'm out. So I was given a reprieve to get out of Ford, but it did hit its pre-market lows again, down at $9.86. It's kind of bouncing all over the place. This looks like distribution to me. Though I don't think it's going to be as quick as you might think it is. I think it'll take time for that roll to the downside. I would say to you, if you are interested in maybe buying lows on Ford or GM or these auto companies, to refer back to the auto tariffs from 2018. It was a really slow sideways move. It traded sideways for 9 months before a bloodbath. All of these auto companies took about 9 months. The fascinating thing that I gleaned from looking at GM, Ford, and the rest of these automakers in Tariffs 1.0 was that it was a dream, if you're an options seller, to sell OTM puts and calls, condors and spreads in 2018. These automakers in that time period traded like Clorox bleach, just sideways. I'm assuming it's because there's so many fucking shares out there of these companies that are so old. There is a fair chance that you could make some serious money on these companies trading sideways for a period of time. Though this is not financial advice, I would take a look at these car companies in Tariffs 1.0. So maybe we don't get an outperform by these companies, but not necessarily a bloodbath. If you are looking to short these companies to the depths of hell, it would behoove you to put a lot of time on that or be shorting the highs. If you see a squeeze up to like $10.50, $11, you short it. But don't be expecting like Ford to trade $2 tomorrow. It's very unlikely that happens. But check prior history for your own due diligence. It should trade in a nice fat range, slowly and sideways, like a whale for a period of time. Not financial advice. I'm fucking glad I got the fuck out when I did. I don't think I would mind doing that trade, but I would definitely want to own it at like $9 maybe, $8, and then take that trade if there's like a capitulation moment. Then it comes back into range again. I'd be comfortable doing that, but I want to own it lower. I wanted to buy it at $9.25 and I missed it. I was busy here in the stream. I don't know if you guys noticed, but sometimes I'm in trades here, and I'll give you an example. On 2 days ago, I was scraping the bottom of the market, and my calls printed into the close, and I was blabbing about expectations for the next day and not watching my calls. So I got trapped in them into the close. I would have sold at 4:15. I got the entire day ramp in like 15 minutes. The entire move to the upside. It took like 15 minutes. Like it was like 3:30 to like 4:15. We went from the bottom of the daily low to the top of the daily high. So that same thing happened with me with Ford. I was like, I want to buy $9.25 or something. I think I bought $9.50 and I sold at $10.35. So I didn't get the price that I wanted because I was here blabbing on the show. So if you're interested still in that trade with Ford, if you could catch a low, maybe like $8 somewhere in there, it should still trade sideways for the year. And you could probably do some kick-ass spreads on it, selling puts and calls higher and lower and stuff. GM manufactures 52% of the U.S. sold vehicles domestically, with 30% coming from Canada and Mexico and 18% from other regions. Ford produces 77% in the U.S., 21% in Canada and Mexico, and 2% elsewhere. Shares of GM dropped 6% in pre-market trading Thursday, extending Wednesday's 3% loss. Ford initially fell after Trump's announcement, but pared losses the following morning. Brinkman said GM reported about $157 billion in North American revs for 2024, which JPM estimates roughly $140 billion relates to U.S. new vehicle sales, excluding. Give me one quick second here, guys. Hang tight 1 second. My coffee is dying over here, guys. Hang tight. Coming back down into 5,700, I do want you to see that we have on SPX, we do have a half an hour trigger coming down right here. Whenever these cross like this, it's extremely bearish. So we've got this this hourly, and we've got a half an hour trigger attempting to cross right here. This can lead to major downside moves, closing the gap down there. The sellers are slamming us into a major gamma bar right now. You see this? This is 5,700. There's a big pain trade happening here. We're catching the low right now. We're going to then begin to staircase down, close that at minimum, close that new low, and possibly even slam down into 56.50. We're now deep in negative gamma, extremely bearish. Oh, sorry, I take my old manny thing off here. S&P 500 losing support right now. We know about mechanical upside moves. Are the buyers here? The answer is no. We know that demand is not here. These are mechanical upside moves. And we also know there's the blood. So we're losing some support here. We're going to go wham straight down. There ain't nothing here, boys and girls. Not a thing. There. Right there. That looks sloppy. This is bull support here. Entire move from 10 a.m. is erased. JPM estimates that GM's share of imported vehicle parts amounts to an additional $4 billion in tariff exposure, based on its estimated 17% share of U.S. vehicle production. Combined, the $14 billion tariff bill would effectively match the $12.5 billion to $14 billion of global EBIT GM is guiding for 2025, before accounting for tariffs or the potential loss of EV subsidies. For Ford, the hit would be smaller. JPM estimates that only around 10% of vehicles it sells in the U.S. are imported from Mexico or Canada. So a little bit less hit here for Ford. Of the $125 billion Ford reported in U.S. revs in 2024, about $110 billion is likely tied to new vehicle sales. Now remember, not as bad as GM, but also likely, still bad. The hit to Ford is about 75% of what the hit is to GM. Brinkman added, we grossed down to $9 billion, given our estimate that the average selling pressure of vehicles Ford imports from Canada and Mexico transacts for materially less than company average, as opposed to GM, for which we estimate imports ASPs are similar to the company average. Adding that a $4 billion estimated tariff on imported parts, the total impact to Ford could reach $6 billion, or 75% of the $7.75 billion EBIT it expects in 2025, and around 60%, the $10 billion JPM views as a normalized earnings level. That compares to a roughly 100% tariff burden on GM's 2025 guidance and JPM's normalized estimate. Brinkman said he still views Ford shares favorably despite the threat, citing structural and management improvements. Quote, we find Ford shares attractive given valuation only roughly in line with history, despite a number of significant positives, he wrote. Pointing to a refreshed vehicle lineup, the revamped F-150, and efforts to streamline international operations. Quote, we also like Ford's leadership team, which we expect to bring a renewed focus on launch and warranty execution. Tesla is less directly exposed. which all vehicles sold in the U.S. built domestically. Still, Elon Musk cautioned late Wednesday that the company wouldn't be entirely insulated, as some components are sourced from abroad. If you notice this morning, Tesla, or overnight or yesterday and this morning, Tesla did not take near the hit as Ford or GM.
A high yield of 4.194, 4.194%.
About to go into an auction here in just a moment. I thought that was an auction. We had one earlier. I thought there'd be another one. We also have the Fed balance sheet later today, too. And we have NFP. Or no, sorry, I got the wrong dates here. We still have an auction. 7-year note here. Also note that we have PCE tomorrow at 8:30 in the morning, which should be bullish. Or in line, I should say. Look at Ford, man. Ford's looking brutal. Need Ford to like settle down over the couple weeks. Try to grab a low on it. Tesla traded a high at 291. Now it's coming down into support demand right now. There is a giant gap lower on Tesla at 249.72, 255.35. Let me take a quick break here. I'm gonna go potty. It's 12. It's 1:00 already. I gotta take a leak. Watch this auction. This is the last one of the day, by the way.
Surely expecting the when issued yield for the 70 note auction. 10 seconds. $4.227% before the $44 billion auction. The Treasury when issued 4.227%. Bid cover of 2.53, 2.53 with an average with a high yield of 4.233%. And awarding 8.03% of bids at high. Primary dealers take 12.67%, direct 26.13%, and indirect 61.2%. So US 7-year note draws 4.233% versus 4.227% pre-sale when issued yield. With the US Treasury 7-year yields rising after the auction. Putin says number of Russia's military servicemen will be rising in the Arctic. Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%. Will be rising in the Arctic.
SPX coming back into that gamma bar. There's a pin here at 5,700. We're hanging on to it down here. They don't want to print all these puts down here. We're just parked now on 5,700.
According to CBS, Volts is to join Vance in Greenland.
Just a note here, too, that I told you earlier about the U.S. Has paused payments to WTO. Fitch Ratings expects the U.S. admin's ongoing reciprocal tariff review to result in meaningfully higher tariff rates in April. Just note that we've also been getting the ramp-o-rama into the end of the day. We ramp the beginning of the day, sell the middle, and then ramp the end of the day.
Surely expecting the Fed reverse repo data. Forty-three counterparties take $291.785 billion at the Fed reverse repo operation. Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service. Department of Justice says seizure of about $200,000 cryptocurrency and scheme.
Let's see if we can turn this around here. Watch out for a ramp to the upside. We're going to go meet that half-hour trigger up there. Nice higher low in intraday. Bears got like one or two more shots at it, and that's it. I'm going to find out here in a minute. Yeah. We got 15 minutes left. We'll find out. need to stay above right here. I'm eating some lunch here in the background, so I'm going to mute this really quick.
Minutes later, we're expected to hear from Canada's PM Carney. We'll see if we can try and find a video, and we'll get that out on the feed. So we have posted out the video on the Financial News feed for you to watch. It is due to start in about 9 minutes. The video itself has started, but it's due to speak in about 9 minutes.
I'm going to put Carney on for you. So we can listen to him here. Hey.
Five minutes ago, we're expected to hear from Canada's PM Carney. Video is on the Financial News feed, free to watch. Surely expecting to hear from Canada's PM Carney.
We're losing support now. It was good. Eating some like Cape Cod chips and I don't know what this is, like some kind of like pimped out stuff. It's called Hot Ham or something. Still haven't lost it yet. Close as fuck, standing right on the edge here. It was a massive 2-day 5700 2-day gamma bar right here. And they have not been turned off. They have not been monetized. Just a note here that as we come into the close, those 2-day gamma is going to weaken. We should expect a super ramp into the bell if they can't get us underneath. Watch out for that ramp as the day wears on. Four people wounded in Amsterdam stabbing.
According to CNBC, GameStop shares dropped 23% after the retailer issues debt to buy Bitcoin.
GME getting hammered.
Do you want to stay up to date with the latest and be on the bleeding edge of news for payrolls?
Bye bye, GM. Or that's GM.
Special offer of Financial Juice Pro.
I was like, oh wow, that's really fucking ugly.
The price of 1 month and save 92%.
Ooh, GME is even worse. GME getting taken GME getting taken to the woodshed. Damn. Oof, look at that. God damn. What, Jesus Christ, watching GME right now. Let me turn this back on here. Sorry about the break time shit. I look like I've been eating lunch. Fucking starving. Okay, so a few things here. There's a massive... Earlier in the week on Tuesday, there was a massive hedge thrown on the market. 2-day puts. Someone's doing it. They're just like slamming the put button. I posted that in Discord in the Pro channel, I believe, on Monday or Tuesday. The switch, we had a bunch of calls. We were looking great. And then they slammed on a giant fucking put position. And that's right when we're trying to break out and hit that 55.78. And they just did the same thing again today. So I posted it in the Discord. There's a 2-day 5700p. And it's also amplifying gamma that's lower to 560 56.50 and 56.75.
Trump and Canada's.
We've got a Canadian speaker coming up, right? Not just the speaker, but the PM from Canada here. So we're ahead. The market is like massively edged at this moment. Just be aware of it. But do note that we are coming into the end of the day. And normally I would say, yeah, we're going to squeeze up here. But if they murder these 5700s, there could be some blood and then a ricochet to the upside. And nobody has monetized these puts. None of these puts are going away. People just have them on. They don't give a fuck. So until they monetize them, or they begin to lose value, we're not going to get a move here. We're just going to be pinned in. GME getting annihilated right now. Kind of looks like the right place, though, anyways. It makes sense that they would sell right there and announce that that package. Whew. Almost time to buy it again. If I don't trade GME anymore, but if you are a trader of GME, if you can see. Nice round $20. Might be buyable. Yeah, about $20, $21, somewhere in there. We're still parked here, by the way, just so you can see. But they are staircasing us down. And we also have Carney coming up here in just a minute. You watch this. We still haven't given it up. Just so you can see here, this like 15-minute candle. Holding right now. But the sellers are here, so just be aware that they are trying to hammer us down to the depths of hell. This looks pretty fucking bearish right here. And also note that the half-hour trigger is crossing right now, so they're going to try to blood us down. It's like do or die here for the bulls. Target is... let me just make sure I got this right. That's right here.
S&P Global Ratings say that crypto is growing in US state reserves, according to a report.
Right about there. Still not there yet. There's another fly in the ointment with this stuff too. Whoever is keeping us pinned down here, whoever, like, this is the second time that they've run this this put program. When if they continue this into next week, and this gamma is still important, there could be no unwind. And more specifically, until after Trump Tariff 2.0, or not, that's not Trump Tariff, Liberation Week, Liberation Day ending on April 2nd. There is no requirement for an unwind here if we trade 56.50. We're not there yet, but we're fucking close. So dealers do not have to close or unwind their quarterly position if we're down here. So someone is definitely keeping us down here. There is a prevention of squeezing actively. What do we got here? What's some other news here for you? Says Trump and Canadian Prime Minister Carney held their first call today. Carney is about to speak. S&P GR saying crypto is growing in the United States reserves. Oh my God. I can't believe this is real. I want to fucking pull my teeth out just fucking thinking about the fact that the U.S. owns, well, no, I shouldn't say that. Let me rephrase what I'm saying here. If the U.S. is accumulating crypto, I got a fucking problem with that. I'm sorry. It's a goddamn scam. If they're accumulating it from seizure, that's fine. I'm okay with that. Like, yeah, I seized the Bitcoin. Keep it. If we're buying crypto with gold, which is what's being asked, I got a problem with that. Like, you want to buy it with dollar bills? Sure. If you're selling gold for fucking crypto, you just make a U.S. Cryptocurrency backed by the full faith of the U.S. It's a fucking scam. Sorry. I'm not going to ever fucking publicly tell you that's okay. It's not. And no, it should never, ever be okay. So we've got Trump and Prime Minister Carney having a call. I can't tell from this post what it means. I did show you, I think, or I reviewed an article earlier this week about gold being offered to buy crypto. You got to fucking really fucking drill yourself in the head with a fucking hammer if you're that fucking stupid. Like, I kid you not. Yeah, I'm not anti like a crypto coin from like backed by the full faith of the U.S. I'm not even against the U.S. government printing some $100 bills and buying some crypto because that's what it's fucking worth. Nothing. But if you're gonna take like gold, convert it to dollars, and then fucking buy it, I think that's crazy. I think that's bizarre. Unless maybe you're buying it from the U.S. You're taking a U.S. gold bar and then buying it from the U.S. Fed. All right, that works for me too. That sounds scammy, just scammy enough. But I'm like, no. If you seize it, I'm fine with it. If you wanted to seize it and reinvest it, I'm fine with that too. But I got no time for like investing my motherfucking tax dollars in cryptocurrency, Bitcoin or otherwise. What else here? Or even the wealth of the U.S. The U.S. I have a problem with that. But whatever. Anyways, it looks like we're buying crypto now.
It says no planned yet.
I don't know how we're accumulating this crypto. It's this article is kind of like a bullet point. What else here? A number of Russia's military servicemen will be rising in the Arctic. No shit. Shocked Pikachu. U.S. tops China in billionaires for first time in nearly a decade. Fuck yeah, I like it. Putin, Russia has never threatened anyone in the Arctic, but we are closely watching the situation. That's utterly horse shit. I would love to see Russia fuck around with Greenland, to be honest with you.
Now only 99.
I would love to stomp Russia out, I'll be honest. I would join the goddamn army again just to do that. I'm not shitting. I would love to put my fucking boot up Putin's ass. What else we got here? U.S. is pushing to control all major future infrastructure and mineral investments in Ukraine. What else we got here? Let's talk about Hood. Robinhood's Tenev saying very optimistic about Secretary Paul Atkins. Robinhood's Tenev need clarity on stablecoin. Yeah, pending home sales is delayed. Delayed data. CoreWeave is planning to cut the IPO size to 37 million shares and price below range at $40 per share. I can't wait to fucking murder that goddamn thing into the depths of hell too. Send that fucker down to like $2. Squeeze the shit out of it for like a day or two or a week and then short the fuck out of it. What else we got here? Price targets raised for year end. I'm not into this gold. Be really careful with these gold. I gotta warn you guys of something. Like this gold shit, like raising price targets on gold. Gold to me is like near top. Like squeeze to 32, but then reverse hard. I'm getting really like more bearish on gold than I am. I'm getting more I'm getting more. How do I say this? More bearish on gold and more bullish on S&P, even though price doesn't reflect that right now. It's the opposite. What else do we have here? Put gold on a weekly basis that's clear as day. That's super fucking bearish. What else I got here? It's not quite there yet, but it should be like a vertical move and then immediate reversal and wrap everybody up in it. You'd be fucking talking about how you're a gold bull for like 5 years. Yeah, European equities are now European equities are becoming super oversold. Excuse me, overbought. Not oversold, overbought. Excuse me, my language there. There's a giant fucking gold trap. I want to start shorting fucking gold. I'm not there yet, but soon. I'd like to put like a 5-year fucking short on that shit if I could. Check it right now. I was looking at it the other day. Yeah, this fucking thing is getting ready to get shorted. This again. All right, fucking skulls. I might have to do that today, or I might have to do that on Monday. What's your goddamn puts on this shit right now?
Now at the top of the hour, Trump's roll call indicates he's due to be signing executive orders.
Give me a second here. I might just buy puts today. I don't even know. Well, maybe I should wait. I don't want to be too fucking stupid and do this. Like maybe it's a wait. Maybe I have to wait for it on. Like wait until Monday or something. Fuck is gold.
So the roll call does note that this is a closed press event and there does not seem to be any live videos available as of yet.
Yeah, I see. Like I see that. I see that. You can't short this shit, can you? It's like too vertical right now. Like shorting it's insane right now. I gotta pick like a I want to though, really badly. Short that fucker right into like October.
Canada's PM, Carney, has not spoken to President Trump, according to Carney's spokeswoman. So we did previously see from a source that Trump and Carney held their first phone call today. However, Carney's spokeswoman now saying the Canada's PM has not spoken to Trump.
You can't short this right now. It's not ready. We need like a big gold squeeze here. $282. It's already failed 3,000. Like we failed like this three. We failed. Oh, excuse me. It'd be one thing if we were under it, but we're above it. And that's where the fucking problem is. Like we failed to 3,000, then we broke above it. The moment we broke above 3,000, it's fucking. That's a goddamn island. It ain't going nowhere. I think that it's going anywhere. That just tells you right there. Fuck you. There's your failure of 3, but the break above is super fucking bullish. Like this is extremely bullish here. But I want to short the fuck out of it really bad. It is so goddamn close to being topped. Quarterly still looks good. Monthly is super fucking topped out. There is a trap in here, but I don't know what the time frame is. I mean, you're still talking about like some kind of like tag of 32, which you can't short that shit. Going up 3,200. Then this shit's gonna take time. It would need to be like.
So again, in 5 minutes' time.
Can't do it right now. You gotta wait till we get to 3,200.
Signing executive orders. The roll call indicates this is a closed press event and there does not seem to be any live videos available.
Yeah, I've got the video on right now. There's nobody there. They just keep walking by the podium. If you can see it right here. This is where you trap everybody in. We go sideways and then down. But you can't fucking time this bullshit. This could take like all goddamn summer into like the fall and winter. But it's going to be an epic collapse too. It's not ready yet. On like a higher frame, it's ready, but it's like a 1900 put for gold in 2027, late 2027. GLD. That would get annihilated. But a spread might work, though. Hold on here.
US to target all Brazil sectors if imposes tariffs on it, according to Folha. So again, the US to target all Brazilian sectors if it imposes tariffs on it.
So, it's like depending on how you're looking at this. This is gold. I mean, I don't want to fuck around with that. That'll destroy the chain. That shit right there is going to be fucking epic. This is gold. But, this is months out in time. We got to get everybody partying up in here and thinking it's going to 5,000. They're like, these motherfuckers don't sell shit. These bulls might be worse than fucking Tesla bulls, I'll be honest. What's a fucking put spread? Like a convexity put spread? Hold on here. $240p. Gold. Give me gold. See if they're worthless. I bet they are worthless. Trade gold options. Hold on. GLD. I bet you puts down there are fucking dirt cheap. It's not even that high yet. February 2024. Wait a minute here. February of 2024. Oh, yeah. 186. GLD. $186. So that 190, 185. 190 buy the long put. Far out can you go? Oh, that sucks. You can only get options out to January of 27. That ain't gonna work. You need options for like all of 27. Shocker that they're not available. There are no. Oh, wait a minute. Puts 190s, 185. They're expensive right now. They're not cheap.
CBO notes 30-year deficit and debt forecasts linked to slowing economic growth and potential shrinking of population without immigration.
I'm shocked they're this expensive.
Projects debt held by public in the fiscal year of 2055 at 156% of GDP versus 100% in 2025. They see US GDP growth at 1.4% in 2055 from 2.1% for 2025. Again, they note the 30-year deficit and debt forecasts are linked to slowing economic growth and potential shrinking of population without immigration.
We need to go higher.
Costs on US debt projected at 5.4% of GDP by the fiscal year of 2055, exceeding costs for discretionary programs, including defense.
We need gold to go like 3,200. It's not ready. The trade's not ready, but and the put spreads are not worth it. And the dates aren't right.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month. And
Still grinding on spoos here.
Lockheed Martin and Google Cloud announced a collaboration to advance generative AI for national security.
Be ready for a ramp into the close. Somewhere in here, I'm going to get rid of this now. Just be careful of a super ramp around 3 p.m. We should start bottoming in here. Just note that no bad news. We're going to start bottoming and start ramping up into this close here. Watch that line. This is all squeeze territory right here. $573 is target. 1, 2. We have a higher low here too, so this could start right now. Watch out if you're a bear. This is the line right here to break through. Need to break through this. Have this come up. The market's going to start squeezing here into the close. Be very careful as a bear. SPX recovering. Coming up to test the cross of the half an hour and hourly trigger on SPX. You can see it here. 5700 now recovering. Too much time fucking around down there. Watch out if you're a bear. Also confirming a daily a higher low in the day. We had our first target at 57.88. Next target into the close would be 572.71. Note too that at 570, it's the breakout zone. So I just want to show you this really quick. So just be conscious of this right here. See how this was thrown under 570? They're going to make another attempt to get above this. To start cranking higher. To trade 78. The thesis wise, there's sellers lower now. They're down here, but they're not getting the lows that they need. Watch closely. See if they're still strong. They don't look like it, though. Look like they're weaker than the buyers that are coming up. Note, too, that if you look back on the last last 13 trading days, we continue on a weekly basis to be seeing higher lows. Just note that for all the bearishness, we have not seen a where's Monday? We say today's Thursday, right? Wednesday, Tuesday, Monday. Just note here that Friday's low we have not seen. Last Friday's. And this is the test of a new weekly low. We have not seen it yet. So on a weekly basis, the bulls are super fucking strong right here. Be careful if you're a bear. You kind of need this new weekly low here today or tomorrow. If you don't get it, they're going to ramp your fucking ass in here. We are pinned in, but there are buyers here. Just note that there are buyers fucking accumulating right here. Get out of the way if you're a bear. You can maybe take another attack at it tomorrow with PCE. And that's not in your favor, by the way, if you don't know that. PCE is not in bear's favor. No, it's not really. I shouldn't say it's not in bear's favor. It's not. It should come in like hitting, maybe not hitting expectations, but not like rampant fucking hot as fuck. So I don't know if that news will do it for you to get you underneath it. Maybe. There's still, those puts are still on. So if those puts were to get cheap tomorrow, the 5,700 get dirt cheap, they burn them out. Maybe we could get down there, but just note that there's buyers here. There's a lot of buyers here. Time's running out for you right now today as a bear. You need a trigger. You need like Trump come out and do like a grand tour or something and like threaten a bunch of countries, or you need something to send us down there. I thought maybe this guy Carney from Canada could do it for you. They came out and started fucking shitting all over Trump or whatever. But he's doing a closed door meeting. So you don't have your trigger. You don't have your excuse to dump it. Panic people. Just be careful in here if you're a bear. If you're looking to accumulate, this is the zone right here. Between here and 4 p.m. Any kind of like weakness in here. They're buying the fuck out of this right now. I'm assuming this is dealers. Also note half-hour velocities has higher lows and hourly velocity is picking up. Both bullish. 15-minute velocity is bullish too. So 15-minute is bullish. Be extremely careful there as a bear. I'm going to ramp you again, just like over here. Same thing. Careful. Careful here. Another one.
Ontario's Premier says no plan to reimpose electricity export tax yet. So keep in mind, Ontario's Premier currently speaking with reporters.
Hopefully you're getting out if you're bearish. I warned you down here. Squeezing now to the upside. Be extremely careful. This downtrend right here being broken above. If we can back test this successfully, we're going to fuck some shit up to the upside.
Protect your trade.
Just a matter of a successful back test here.
Financial Juice Pro.
Watch this cross.
Only $99 a year for our real-time.
Rampo-rama. SPY trading 568.50. Yep, there's the SP. It's already getting the green bar. You see it here? I drew it in down here, but it's getting covered up now by the green bar. We're going to come back up and test this cross on SPX. If you want an exit, I'll give it to you here in just a minute. It's on 57.17. Excuse me, 57.20 on SPX. SPU's ramping again. Second pump of the day. And buy the morning dip, sell 10:30. Buy the end of the day, ramp it up into the close. Bears looking for a repeat of yesterday where we held on and then we would staircase down. Not happening today. Try again tomorrow, though. Close the gap above at like 72, 73. Your next like major sell point is up here. It's like right here. As long as we, of course, successfully backtest this. Nothing's changed from yesterday or from last night's brief. We hit our first target up here this afternoon. We did the halfback trade. So if you look closely at your charts, we hit a halfback today this morning at 570. And now we're going to go up and try to clean up. Next target's 573.23, and then the next target would be 575.34, and then 578. You want to remember those? And they fucking continually, someone keeps coming into the market and hammering us with hedging on highs. It's like every high we get, like if we're looking to trade like 573.36, you're going to see them come in and slam it again as long as they possibly can into the 31st. And you're likely going to see this continue into the first and second at every fucking high. There's massive hedging coming into the market as we come into Liberation Day. I got to warn you of this, okay? There's
Russia and US.
There's two ways to look at this.
In mid-April.
There's like two ways to look at this. Every high, whether we're going higher or we're trying to reclaim the prior high, anything like that, you're going to see hedging. For a stock market crash on Liberation Day. So here, let me talk about this simply here. Let me show this in a really simple way here to see if I can show this without using any other tool. Okay, show this with Weeble's an easy way. Hold on. Give me a second here. So let me draw this in really quick, draw a simple chart for you guys. Let me simplify this for you. This works. This will do it. So, whoop. So just a few things so you can see this here. This is easy. See? So we're outside of trend, right? We're breaking above, showing strength, 576, right? And you're looking to fail to close the gap at 78. We didn't do that, right? It did not happen. You see this? Let me bring this closer. Hold on, bring this closer. See this gap up here? You're looking for, if we're breaking out of trend, you're looking for like a failure to close the gap, right? 78 and some change. We didn't do that. It just dropped us right back into trend. The moment we get dropped back into trend, 86, right? We're going downtown. And this is hedging, right? This means that there's more bearish than bullish, right? People aren't thinking we're bullish here. They're thinking we're bearish. When that happens, where do we go? We're right back down into trend, right? They rocked us right down here into trend. We get, you can already tell that dealers are covering shorts in the after hours, right? Come into 4 a.m., they slam us back down, whoop, back into trend. Auto buys buying us back up. Now that we're at the bottom of trend, what's happening? I want to show you this really quick. There's the halfback trade. And then your next target is right there. Right? So you tagged it. Good job, right? We bring it back down here. What is this? This is hedging. Halfback trade, hedge. And hold the hedge in case we break lower, right? So you're going to now expect that we didn't break lower. You know that what else is going to happen, right? The dealer's going to come in and try to cover short. So you'll see like these actions where they're going to try to take us up, right? Fail this prior high right here, right? And then come back up here, maybe 4 a.m. I got to draw this better. You'll see this Rampo-Rama in here, a failure. And what will dealers do? Try to push us up, right? Into 4 a.m., come back down in here, right? Maybe we retouch again. They'll try again tomorrow to sell us down with more hedging. You're going to auto hedge right here because they want to crash us down below again, right? If they can't crash us below 5,700, what do we do? Right? Bam, 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 right? Or it can't get us down. And now we're heading off into this one up here. Makes sense? And we start creating this little thingamabob right there. That makes sense? Wham, right down, wham, down, wham, down. Should be fairly easy to see. Price target, though, right now is 73. And what did we fail up here? We failed to get 78, right? So price target is still 78. This Thursday, Friday, whoop, right up there. And don't forget, if you hit the 78, it's roughly right here, hit 78, and then we've got expiration on Monday. There's your 85. There's your 80 gap closure. Come back down, crank it all the way up to 85 on Monday close. Now, saying all of that, if we get pinned in with all of this bullshit hedging, you know, someone's slamming the fucking hedge button, hedge button, hedge button. And every time we're down here, they're like, hedge, 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 hedge. They're doing the same thing. So, you know, if we get a failure to escape, you understand, if they're like hammering us with hedging and there's no reason to remove the hedge, and if we stay down here into Friday, Thursday, Monday, we're going to get a fucking major drop, aren't we? And they're hedging below this 5,700. They're hedging 5,650, 5,675. There's massive 2-day puts on this stuff. And then there's gamma below, negative gamma to 5,650 and whatever. So you have to watch both things. Like, yeah, the expectation is we're going to go up here and we're going to, you know, decouple or unwind the dealers on the 31st, on Friday and on the 31st and all that kind of shit. But there's a fly in the ointment. The fly in the ointment is this auto hedging that's taking place here. It'll take place here. They'll try to hammer all this, and they'll just keep hammering the hedge button. Now, that's negative, but there's 2 or 3 ways to look at this. So, by the time we get the second over here. Oh, sorry. Hold on. This is the second over here, and just pretend that they get their way, right? We fail to continue to get new highs. They keep hedging, right? Bam, hedge for a drop. Theoretically, if Trump doesn't sign something that terrible, we could be fading down here to 65.50, but if he fails to do anything, we're going to fucking moon. And the reason is because of, and it doesn't matter if this happens now or later, if nothing truly that bad happens, you see it right there? If nothing truly bad happens, the unwind is going to be fucking stupid. Because everyone's so fucking well hedged here now. Does that make sense? Like, you need really, truly bad news from Trump. I don't know if we get that bad news or not. He wants to do it, though. That's why we went over this. Trump wants to crash the stock market and create a recession. This is kind of his last chance for right now to do it. So, but just note that they are hedging that. Trump's going to crash the stock market. I'm going to hedge that. And I'm hoping on Trump to provide that, that bloodbath. Now, I do want you to know, this is a great way to do this sometimes because it's so simple. I do want you to know that, let's say he's correct, right? Let's say they're hedging, and it eventually matters, and we get to the second, and Trump is right. We're failing to get new highs all along the way. Start getting sketched out, right? And if Trump is legitimately going to do something we don't expect, and they don't do the unwind, we're going to go party time. We're going to take that. We'll take this out even if we don't have bad news. And if it is bad news, we will blast right the fuck through there, and then we'll start a party time into end of April. So you just got to be aware of all this stuff. You don't necessarily have to be like, yeah, I'm bared up here. You have to pick your poison. Are you a bull? Are you a bear? Do you think that Trump's going to win? All that kind of shit, right? And what can Trump do to make that happen is pretty severe. You have to remember too that most of this stuff is priced in. The one thing that's on a bull's side right now, if a bull had a case, it's this right here. That's the bull's case. We've priced it all in. You better come up with something really fucking good, because if you don't, worst case scenario is retesting that low, and this looks a lot like March of 2022. All this looks like a normal correction, and even a back test would be normal. And if we just unsqueezed right now, that would be normal. This is normal here. That's normal, and even that is normal. So these fucking bears better get something good. Otherwise, we're gonna start fucking super ramping sooner than later. Is my point. So I guess you pick your poison, right? You're either picking for bullshit Trump, unwind it, we're above 56.50 and start the unwind on the 31st, or you're on whatever Trump is going to say is not that bad, and so we'll bounce anyways and trade higher. This is why I own S&P 500 and I'm not sold. I haven't sold. I think one of these two outcomes are most likely. These are the most probable outcomes right here. Now, let's say Trump throws a goddamn bomb in the fucking market, and he's like, you know what? Fuck you, fuck Mexico, fuck. We just invaded Greenland. Well, yes, you're right. We're gonna, depths of hell. We're fucked.
Around $2.24.
Even then, though, I think it squeezes back up again because you can't keep the S&P 500 down, can you? So pick your poison here.
Up 24.
That's the only thing I can tell you.
Or 0.39%.
I'm sure there's a fucking bear over here that's like fucking, which is an Elliott waiver going, oh, here, like this down here, and then, up there. I'm sure of it. Hold on a second here. There he is. There he is right there. Grrr. We're going down, bro. Down there. Just like that. Okay. Oh, yeah, baby. But this can be a bear trap, too. You're just like, they telling you all that bullshit. They failed to get the low. Out of here. Failed to get the new market low. Out of here. So just like they need to be buying puts. We need lots of puts being bought. We need all the doom being spilled before we get to the second so we can just start cranking.
Then sign up today and get our
Sorry.
special offer of Financial Juice Pro for a year's worth of our service for the price of one.
So there we go, right back into the stream of things, right? And they want this to happen today. And there's going to be other bears going to tell you, we don't care about April 2nd. We know that we're going to sell volatility before we get there. There's a bunch of bears that are going to tell you this too. They're going to be like, well, we know the unwind is coming on the 1st. These fucking guys, they fucking know. Hold on a second. Like the stories never cease to amaze. We know the unwind is coming on the 1st. Sell the news on the 2nd. So I want my fucking doom right now. Let's blood the fuck out of this market and fuck the bulls over there, right? So you got to be aware of that too. Any failure to get new highs,
and agree not to impose.
You want to be aware of that. So we did the halfback trade right here. Let's look at it again. There's the halfback trade. If you're a bull, you need to see this trade right here. 573 must hit it. Do or die. Dealers better help you. You better get a good PCE so you can hit that number tomorrow. That is required for a bull. Make sense? We start dicking around over here, start dicking around, more hedging Friday, straight down. Makes sense? The way is lower if we cannot hit 73. Make sense? As of right now, though, they're buying it. These are dealers. They're buying right now. Bears haven't gotten their fucking trigger yet, so we'll give it to the bulls for right now. Way is still higher, unless you can get like bad PCE. I don't know. You need a trigger if you're a bear. You need something. You need a reason to go party. And the bulls need to fail 72, 73, somewhere in there. Well, they have to hold this right now. We get the cross. So we got this initial squeeze up and out of trend. Now you got to hold this. Then we got to trade that. Then we got to hold that. And then we got to hit 73. So far, half an hour velo is good for you. 15-minute velo is good for you. Hourly is good, but it's not permanent. It's not the perfect place to be with hourly velocity. So the bears are still in the game. I don't like where hourly velocity is in a 30-minute right now. I wish it was like fucking like negative fucking 50 or 100 right now. If it was like negative 50 or 100, I'd be like, fuck that. Bears are dead. We're going to murder them all the way up. But it's not. So bulls have some momentum, but it's not permanent. It's not guaranteed to work out. So if you had like negative 15, negative 30, negative hour velo, I'd be like, bears are going to get fucking wrecked here. Like squeeze straight up, but we're not quite there yet. They got another fucking shot at it, these fucking bears. If there's another positiveness for the bulls, I think I said this earlier, but I need to say it again. You have not closed the low on the weekly yet. And that is important. If you're a bear, you know that you want to see the low taken out from last week. And that has not happened yet. So if you should close the door in a second week of a fucking higher low on SPOOs, that's pretty goddamn bullish for next week. So if you're a bear, be paying very close attention to, I believe, the Friday low of last week. You want to be paying very close attention to that low right there. That's your shut the door on bulls. Get fucked. We're going to fucking bury this shit. I don't know if you guys understand all of this, but at any rate, let's see what happens. Right now, target is higher until the bulls fail. Bears had it in their court earlier today. They couldn't get it fucking done again. You had all goddamn day to do it. Yesterday you got it done really well, but today not so much. You parked us right on the on trend. There is someone else here. If you are a bear, just note that we are in major negative gamma territory, being at the bottom of trend. Just be aware, because we're in such negative gamma, that all else equal, we can go vertical at any time to the upside. Unlike being in positive gamma. You're like, wake up tomorrow and we're up 30 points, 40, 50 points. You're like, whoa, how'd that happen? Because we're in negative gamma. What else? All the dirty laundry is being aired. That's good to see. The more dirty laundry we air, the better off we are heading into Trump tariffs. I mean, I don't know what the fuck this guy can say that hasn't been said already. I wish somebody would talk to him and say, hey, man, if you want to crash the stock market, shut your fucking mouth until Tuesday. But he can't control himself. He's got no fucking self-control. If he saved all of his doom, if he came out on April 2nd and just started hammering on tariffs and hammering on countries, this fucking market would go straight vertical down. But he can't control himself. He keeps doing these fucking pressers and fucking speeches, and he's like getting, unless he's got something big planned. He's got to have, because I guess if he is, he's got to have something. He hasn't said anything to anybody. I don't know what else he could say. What the fuck else can someone give me something? We need speech writers from a horror movie. Because I don't know what else bad he could say. My God. That's odd. I didn't see anybody short with me at the top. It was maybe three of us. All of a sudden everybody's short. I don't know. We're closer to a bottom in my view, we're close. Even if we blasted at 510, I think we're closer to a buy than a sell. The risk is all on sell side here. And I felt the same way in the buy side on the up. When we were at 514, I was like, yeah, we can trade 525. And I was like, but this is the time to hedge. You know what I mean? We're at 514. I'm like, start fucking hedging right now. I know we're going to 525, but it's the same as being right here with a bear, Bear's we're going down to 5. We're going to hit the fucking low, the actual low at 53. We're going to slam down to 510. I get it. Bear bulls tell me the same shit on tops. So I don't know. Usually it's a fucking trap for the loudest fucking bear, or the loudest goddamn bull. Everybody's buying fucking calls up there for 625. That's there's your call wall. And they ain't printing them, so we fucking start turning down. This is the time to start hedging for the upside, in my view. Even with all the doom and gloom and all the bullshit, I don't see the recession. It's starting, but we ain't there yet. He's doing a good job. He's fast forwarding it. It looks like. Maybe if you're looking for a drop in maybe you're looking for like a drop in February seasonal weakness. Maybe we get it now in September, October. I'm much less. We're supposed to be the strongest we're gonna be in September. By the way, I don't know if you know that, but some of you should know that. Our Discord knows that. Our strongest cycle this year is September. I don't know if you know that. Like our waves and cycles, strongest of the year is September. And I'm looking at Trump and I'm like, fuck me. Like, is he trying to get this done like when? Summertime? Because like, he can get like, is he trying to push the crash from February of 26 to like September, October, Black Monday? That's a toughie. That's going to be a tough sell. Our strongest time of the year this year is September. In that weakness, it's like mid-September when we come down. That should be the beginning of the strongest cycle of the year. Like we should go vertical, straight up into the end of the year, like a vertical line. So I'm still wondering. Like I get that he wants to like speed it up. Maybe he knows he has to get it done before summer. Maybe he already knows that. Maybe he's got people telling him that already. I don't know. I don't know the answers to these things. I know that there's a lot of shit we don't know. When I was in the army, I always relate this story to people. Like when I was in the army, the stories that they would tell the public were 100% false. Not 50, not 20, not 80 truth, not 20% truth. They were 100% false. 100%. And I would sit in rooms and I'd be like, fuck me, man. And then I would sit in like in a container and watch AFN, I think it was called. And I'd be watching the news and I'd be like, they're fucking talking about shit that's not even real. It's not even real. Like not even fucking real. It was so bizarre. I wish I could tell you the stories, but I can't. I'm probably go to fucking prison if I told them. I'm serious. Like, but I think I can tell you that at least. That the things that
barrel, which is up 24 cents or 0.33% on the session.
Things I witnessed and the things that I saw with my own fucking eyes versus what was on like every news channel was abjectly wrong, and that I hold that dear to my heart even today. Going, oh, what are they gonna do?
Protect your.
What do they have planned that we don't know?
With Financial Pro. Now only $99 a year for our real-time service.
Wait a minute here. We've got a Ontario Premier saying, I just spoke to Prime Minister Carney and agreed to not impose countermeasures till April 2nd. We still have negotiations going on behind the scenes. Dude, they're going to take all your money in that trade, by the way. We're going to trade this. When does that thing launch? When does that IPO happen here? What's that fucking ticker called? Can't wait for this IPO now. I'm all excited. CoreWeave. When does that fucker when does CoreWeave IPO? I want to trade that. We're going to take all these fucking FOMO bulls' money. Tomorrow? Nice. The hell was that? Oh, sorry. That was me. I did that. My bad. Like CoreWeave trades tomorrow. We'll trade that together. I'll trade that with you. I want to run it up and then short the fuck up. Well, not short. I don't know if you can short it. I don't think you can right away, but I don't even think they'll have options on that shit right away. I don't know. I'll have to look into it tonight. They're pricing it tonight? No shit. I want to send that fucker down to $5. Well, so it depends on where it opens. Whatever the opening price is will matter. They're over here bragging that it's the. I like this. They're like says NVIDIA will anchor CoreWeave deal at $40 a share with a $250 million order. They're already pumping this fucker up. And then they're also teasing you with they're planning to cut the IPO size to 37.5 million shares and below range at $40 a share. They're already fucking suckering. They're already making suckers right now. Hopefully we can ramp the fuck out of it, like fucking vertical, and then just start shorting the hell out of it, or whatever. I don't know how the fuck. I don't know if it's gonna be shortable or whatever, but we'll find out. They have. I signed up for what do you call it, Zen something this week. The IPO thing. I signed up for it. I'm still waiting to be approved. I had to like submit W-2s and all that kind of shit. Not W-2s. I submitted 1099s and a bunch of other stuff. Bank statements, all that kind of stuff. We'll watch it on the show tomorrow together. I'm down to trade it. I think someone was telling. Oh, I'm not going to say that publicly. I had someone tell me something that was kind of smart. Like you got a bunch of money drain in meme stocks right now. So you can get some good deals on some other stonks, other memes right now while the money chases. You get some kid trading $1,000 on GME. He's going to run over and trade CoreWeave or whatever. GME just got annihilated, so you know they're all going to, like, all these GME bulls are going to run to CoreWeave tomorrow. It'll ramp. SPY squeezing again, pumping. And going higher. If you're in calls, congrats. If you closed your puts, congrats. Let's look at my I gotta look at my account right now and see what's coming back or not. My fucking account is all over the place. My account looks like my account looks like a goddamn bomb went off in it. I got like some of my losing trades are okay. But because I got other winners and stuff. My weekly is green. My week is green, I think. Let me check right now. Oh no, that's dude. I just looked at SPY weekly instead of my account. My week is basically flat. I've had 2 big down moments in my account this week. But I'm flat for the week right now. If we continue to go up, it's gonna go up bigly. Can't believe we use that word, bigly. My month right now is all over the fucking place, but going up. But all over the place. Mostly because I own fucking shares. I own a shit ton of shares right now. Like my account is like this. My account is, on a monthly basis, my account is trending up, but it's got like these giant fucking woof, woof, woof over a monthly basis. And it's mostly because of SPY. Not my options trading or my options selling or buying, but my fucking like buying stock. It's like fucking every time SPY takes a nosedive, it's like woof. Yeah. And I got a graveyard of options. I got options for Friday. I got options for and I was adding this morning. I was adding shit this morning. Then I didn't add just now. I should have, but I've got like options expiring Friday, options expiring Monday. I'm not selling anything on SPY yet. I haven't done any options or anything. I'm in this like weird place, stressful place. A very stressful, like, I've had some trades making money, and I want to get out of them and haven't timed them properly. I'm in a TLT trade that 2 times now. I wanted to close, and I've missed because I'm off doing other stupid shit. Not stupid, but like I'm not paying attention to my account, so I'm angry about that. I'm very stressed about S&P 500. I'm very stressed about do I want to, or like if we enter a recession early, or stock prices don't come back up, that kind of stuff, or we start not come back up, fail shit, like the sideways market is a fucking nightmare. I hate it. There's like long periods of not being able to buy anything. Like you got to go, oh, okay, I'm going to sell the top. I'm going to sell the all-time high, and then I got to wait for the fucking market to run all the way the fuck back down to buy it again. Instead of just buying and not looking at it for, a year would be nice. And not worrying about it. Just selling puts to suckers. I guess I have to work harder, I guess. And it's frustrating. And it's dangerous. If I get caught in a recession, that's money that's tied up. I mean, I can still sell options against that shit, but it's still money that's tied up. There's like real danger and shit of not being able to outrun inflation, not being able to outrun time or fees or cost of money. The cost of money is a fucked up thing. When you don't have any money, there's no cost of money. I was in a phone call, squeezing higher now, trading 369. 569, sorry. I was in a conversation with somebody a few days ago, and we were talking about the cost of money, and I was talking about my own life and how my wife and I, for many years when our kids were young, it was so expensive. This is like early 2000s, this was 2010, I would say, to 2015. Maybe, yeah, right around there. 2010, 2015 is when our kids started like needing child care, and we're growing and eating, and we're make sure they're okay, and good schools, living in a very nice place. And we were making that time period, we were making $300,000, $400,000 a year, and we were fucking poor. And what would that be today? 400,000 to 600,000 a year. We were fucking poor. I don't even know how you raise kids today. But what's fascinating about that time period was there was no cost of money. We worked every week. We got a paycheck every 2 weeks. Everything that we had, we were budgeted. It didn't matter if we went down in pay slightly or up slightly in pay. We lived within this budget, and there was no cost of money. I didn't understand what that concept was. Start making money and saving money. Like if I sell a house, the money is good as gone, in my view. Like, I'm a very negative person when it comes to that stuff. I'm like, if I sell this house right now, I need to put that money to work. That's the cost of money. That money has to continue to make money, and nobody can touch it. It's kind of like, that's what's good about real estate. You buy a house, nobody's like, hey man, can you shave me off a 2x4, bro? I got this real fucking fire going on right now, man. You know what I mean? Nobody's gonna touch that for you. If my kid gets married, I can take a mortgage out against it. But you know what I mean? Like, the house goes up in value, right? So, but the moment you sell that house and get cash, the fucking hands are out everywhere. Can I have this? Can I have that? Can I have this? And that's why real estate's amazing. Amazing fucking investment. Unbelievable investment. One of the best, I think. There's for like the regular Joe on the street, real estate's where it's at, period. What's that? I lived in Vail, Colorado. My rent matter of fact, I lived in nice places. Like I just looked back recently on a condo that I had there. It goes for $6,500 a month right now. Mm-hmm. What's that? $6,500 a month. How much is that a year? It's like 80 fucking thousand. What is that? Almost 80,000 a year after taxes. That's $100,000 gone. It's fucking gone. Gone. It's like people live like that today. Do you know that? I got you guys have seen pictures, right? I got family that lives in Fremont in California. What do you think that costs to live? That's a fucking that you need to make $600,000-$800,000 a year to live there. That's just living. Like we're not talking like rock star lifestyle or anything. And, well, it depends on where you live. Fucking, I was paying $20 a burger in 2001. No, not one. 2006 in Vail. I was paying $20 for a burger there. I don't think burger prices have caught up to our inflation. I don't think the burgers are. Yeah, I had a hot dog recently in Park City. Cost me $20 for a hot dog. Shit, you not. It was a $20 fucking hot dog. So I guess they're like, well, fuck it. We won't do the burger at 20. We can't, but we'll do a hot dog at 20. That's fucked up, right? That's fucked up. It wasn't even a truffle butter fucking burger. It's a shitty ass. Well, no, I don't know. I didn't pay $20 for a burger in Vail at that cool burger joint they have. The one that has the truffle fries. I forget what it's called now. It used to be much better, but this was on Mountain. This was at like there was a burger joint on the Mountain at Vail that was like $20 a burger. I know, dude. I know, $1.50 hot dog. What did that CEO say? If you touch that price, I'll murder you, or something crazy like that. I shit you not. A hot dog at Deer Valley is $20. Let me check. Hold on. Let me check right now. Let me check to see the price. No, it's only $9. It's only $9. The burgers, the turkey burger is $17, but turkey chili is $17 fucking dollars. That's obscene. Where the fuck did I get that $20 hot dog at? Hold on. Was it PCMR maybe? I had a $20 hot dog in Park City recently. It was a good hot dog. Let me see here. Where the fuck was that hot dog? Had a hot dog recently that was $20 up there. It was nice though. It had everything. Had like the sesame seed bun and had all the trickiness on it. It was almost like a Korean hot dog. All right, what time is it now? 3 o'clock here. We'll see if we get buyers or not.
For Canada's PM Carney's press conference has now started.
Uh-oh.
This was originally meant to start at around 1:30 p.m. Eastern time, but again, the live video has just started now. It is on the feed already, just slightly down.
Bears assemble. I've got it up right here. I got it up. Bears assemble. Market's going illiquid. Do you see it? See how liquid the market's going right now? Wait a minute. Bears might be back in it again. You got like some bears out there like, this is why you don't sell your 5,700 puts. Bear's getting all spicy now. Dude, where the fuck did I eat that $20 hot dog? Now I want to look it up. Hold on. No, it wasn't a Moab street dog. 2 street dogs for $20. Nope. I want to know where the fuck it was I had that hot dog. Or maybe I'm misremembering. I'm just old as fuck. Maybe it was a Korean dog that I had that was $20. Scratch what I told you earlier. Scratch what I told you earlier about a $20 hot dog. It must had to have been a Korean hot dog that I ate that was $20 and I'm misremembering. I think it was just the $20 hamburger. There's no fucking way. Look at Vail Hamburgers here. Vail is home to the $17 hamburger. A hamburger in Vail will set you back $25. So Vail, I remember Vail had a $20 hamburger. They had a $20 hamburger when I lived there. Now they have a $25 hamburger.
My cabinet colleagues and I met to discuss Canada's response to the latest developments in the trade crisis. Yesterday, in the latest salvo in his trade war, President Trump again imposed unjustified tariffs on our nation in violation of our existing trade agreements. This time, he targeted the auto industry and the more than 500,000 hardworking, dedicated Canadians that industry supports across our country. Now, the President of the United States is trying to fundamentally restructure his economy. It means our economy, and it means the global economy as well. And I understand and respect his goal to support American workers, but I disagree with him that this is how to help them. With time, it will become apparent that these actions will end up hurting American workers and American consumers. I reject any attempts to weaken Canada, to wear us down, to break us so that America can own us. That will never happen. And our response to these latest tariffs is to fight, is to protect, and to build.
Ford is weak right now.
Fight the U.S. tariffs with retaliatory trade actions of our own.
GM is weak.
Maximum impact in the United States and minimum impacts here in Canada. We will protect
Tesla's weak right now too.
and our industries during this difficult period. But above all, we will build a new Canadian economy. We will build Canada strong. Se battre pour nos travailleurs, protéger notre économie et nos concitoyens, bâtir un Canada fort. Il est évident que les États-Unis ne sont plus un partenaire fiable. Il se peut qu'avec les négociations compréhensives, on puisse rétablir un élément de confiance, mais il n'y aura pas de retour en arrière. Le prochain gouvernement et tous ceux qui suivront aura une relation fondamentalement différente avec les États-Unis. Coming to terms with this sobering reality is the first step to taking necessary actions to defend our nation. But it's only the first step. Last night, the President of the United States reached out to schedule a call. I appreciate this opportunity to discuss how we can protect our workers and build our economies. I will make clear to the President that those interests are best served by cooperation and mutual respect, including of our sovereignty. Entre-temps, je viens de tenir une rencontre avec mon comité ministériel Canada-États-Unis. Je convoque une réunion des premiers ministres qui se tiendra demain. Je vais rencontrer mon conseil des relations canado-américain et je parlerai aux chefs d'entreprise
Spoo's still holding on.
et aux dirigeants autochtones. Ces discussions permettront d'avoir une réponse coordonnée en tenant compte ce que le président décidera de faire le 2 avril, date à laquelle il a menacé d'imposer des droits de douane supplémentaires. Soyons clairs, nous sommes tous sur la même longueur d'onde. Nous reprendrons avec force. Rien n'est exclu pour défendre notre pays. Let's be clear. We're all on the same page. We won't back down. We will respond forcefully. Nothing is off the table to defend our workers and our country. Now, to my fellow Canadians, I don't want to set unreasonable expectations. The road ahead will be long. There is no silver bullet. There is no quick fix. And I know and I understand that many are feeling anxious and worried about the future. Fundamental change is always unsettling. But I have every confidence in our country because I understand what President Trump does not. That we love Canada with every fiber of our being. Because we are stronger when we are together, and Canadians are uniting as never before. Now, we are going to have to live the lessons of recent months. First, that we have to look out for ourselves, and second, that we have to look out for each other. The federal government will do everything in its power to protect Canadian workers and businesses. We will be here for you every step of the way. In the past week, my government committed to use every dollar collected from our retaliatory tariffs to protect our workers. Et la semaine dernière, j'ai annoncé plusieurs mesures ciblées, temporaires, pour soutenir les travailleurs et les entreprises directement touchées par la guerre commerciale de président Trump. Pour les travailleurs, nous avons supprimé le délai de carence d'une semaine de l'assurance emploi. Nous avons fait en sorte qu'il n'ait pas à épuiser leur indemnité de licenciement avant de toucher l'assurance emploi et nous avons facilité l'accès à l'assurance emploi. Pour les entreprises, nous avons reporté les paiements d'impôts sur le revenu ainsi que les versements de la TPS et de la TVH. Nous avons mis en place un nouveau mécanisme de financement pour fournir de liquidité. C'est une aide financière énorme pour que les entreprises puissent passer à travers la tempête. Et nous avons augmenté le financement des agences de développement régional. Our biggest challenge as a country is becoming the most urgent. Over the coming weeks, months, and years, we must fundamentally reimagine our economy. We will need to ensure that Canada can succeed in a drastically different world. The old relationship we had with the United States, based on deepening integration of our economies and tight security and military cooperation, is over. What exactly the United States does next is unclear. But what is clear is that we, as Canadians, have agency. We have power. We are masters in our own home. Nous sommes maîtres chez nous. We can control our destiny. We can give ourselves much more than any foreign government, including the United States, can ever take away. We can deal with this crisis best by building our strength right here at home. It will take hard work. It will take steady and focused determination from governments, from businesses, from labor, from Canadians. We will need to dramatically reduce our reliance on the United States. We will need to pivot our trade relationships elsewhere. And we will need to do things previously thought impossible at speeds we haven't seen in generations. But we can make ourselves more productive and therefore more competitive. We can break down internal trade barriers. We can build a stronger and more resilient economy. And that's what I'm squarely focused on as your Prime Minister. During my first 9 days as Prime Minister, I came to an agreement with the provinces and territories to remove all exemptions under the Canada Free Trade Agreement. As the federal government, we created a first mile fund to provide capital to build transmission and transportation networks to link extraction sites to rail lines and roads. Nous mettons en place une procédure d'approbation à un guichet unique. Nous éliminons les excisions fédérales créant des doublons en reconnaissant les évaluations provinciales pour les grands projets. Un projet, un examen. Nous présentons une législation d'ici le 1er juillet pour que les marchandises puissent circuler dans tous les pays sans barrière. Nous supprimons les barrières fédérales qui empêchent les provinces et les territoires de faire une...
Jesus Christ, look at those sellers up there. This is the prior high from this morning.
...to removing any labor mobility restrictions for federally regulated professions by Canada Day. And we're now working with the provinces to identify projects of national significance in order to accelerate the time frame to build them. Hier, je me suis engagé à créer un fonds de réponse stratégique pour le secteur automobile. Un fonds de 2 milliards de dollars qui protégera les emplois des travailleurs touchés par les tarifs de M. Trump. We will create an all-in-Canada network of supply chains for the auto manufacturing components straight through to Canadian steel and aluminum and critical minerals. And we committed today to create similar strategies in other sectors that are under threat from President Trump's tariffs. All of these initiatives will go a very long way to offsetting the costs of these tariffs if they are permanent, and they will help to realize our potential as a nation. But there's even more to do. And that's why I chose to go to France and the United Kingdom, two long-standing and reliable partners, friends, and allies of Canada. And it's why the time will come for a broad renegotiation of our security and trade relationship with the United States. It's why I will work intensively with our partners in business, in labor, the territories and the provinces to find more ways to help Canadians through this crisis and to ensure that our great country emerges stronger than ever. In recent weeks, Canadians have done their part to unite in defense of our country. To unite also in defense of our way of life. It's my solemn promise as your Prime Minister to do the same. It's my solemn promise that when President Trump threatens us again, we will fight back. We will fight back with everything we have to get the best deal for Canada. We will build an independent future for our country stronger than ever.
Coming into the hourly trigger right now.
Stand up for Canadian workers. We'll stand up for Canadian business. We will stand up for our history, our values, and our sovereignty. We will stand together to build Canada strong Canada free, Canada forever. Thank you. Merci, and I'll be happy to take your questions.
Thank you, Prime Minister. We will now take 15 minutes of questions. One question, one follow-up.
Bonjour, M. Carnier, Raymond Fillon de TVA. Vous avez dit que le président Trump a contacté votre bureau pour organiser un appel. Est-ce que cette conversation entre vous et le président Trump a eu lieu?
I'm going to move this over.
Il y aura une conversation entre moi et Monsieur le Président.
Just a note here that we're coming into the hourly trigger.
L'appel arrivera bientôt. The question was whether the President and I have spoken following his office contact.
Just note that
The response is
we could have one more bump up here into supply. Seems like it's a little bit higher.
Ça fera 2 semaines
Watch out for a pullback, though. Over here.
de votre part de ne pas avoir eu une conversation encore en date d'aujourd'hui avec le président. Mais est-ce que vous auriez dû lui parler avant, monsieur?
non, il y a des conversations.
That translates into big pump right here. And then, ram it right up.
Les ministres des échanges internationaux avec leur
We satisfied that tag right there.
des conversations souvent. Mais il faut avoir
I put it over here to 4 to make it simpler, but, it could be right here.
tout le monde le sait que
Look for a retest back here.
les autres initiatives
Push up. We tagged it right there. Push down and then push up.
après tout cela, on peut avoir une réponse plus grande. Alors, pour moi, il y a 2 conditions d'avoir pas nécessairement un appel, mais d'avoir une négociation avec les Américains. Premièrement, c'est le respect. Le respect pour notre souveraineté comme pays.
I'm going to turn this off because it's in
Mais il faut
Canadian French. I'm going to turn the news squawker on in case there's anything important that we're not understanding. I understand a little bit of French, but not enough to know what they're. I know what they're saying, but I don't understand exactly what they're saying, and so I don't want to say anything to you that may be inaccurate. Couple things here. I told you earlier that there wasn't that I might have been dreaming that I paid $20 for a hot dog.
Rise to $7.01 trillion. So money market assets rose as investors parked more cash in funds amid uncertainty surrounding the economy and the path of Federal Reserve monetary policy.
I was not lying. So I paid $20 a hot dog at the Red Pine Lodge, Mid Mountain, or on top of the gondola at Park City. Their fucking hot dogs are $20 right here. $20 hot dog right there. Goddamn $20 hot dog.
The price of 1 month and save 92.
And you know what's crazy about this $20 hot dog? They won't even list it on their fucking website. It's not listed on their website. But yes, I paid $20 for a goddamn hot dog at Park City. You can look it up on your own. It's called Red Pine Lodge. On Red Pine Lodge, it's at the top of one of their gondolas. $20 I paid for a hot dog. But here's where it gets crazier. So you guys want to know what it costs to eat in a ski resort, or we were discussing it earlier? I looked up a few other things. It's like the $20 hamburger, $25 hamburger. This is what it costs to get a burger.
PM Carney says we have the best deal of a bad deal within what the Americans have proposed on auto tariffs.
This is what I paid for. Fuck! Look at this. Let me show you this. You guys want to see crazy shit? Hold on. This is the lookout cabin, right? This is a where the fuck's their burger? Ranch Wagyu burger.
We will respond next week when we
$32. $32. Here's what gets crazier. If you go to Deer Valley and you eat at the Opera's menu at Montage, Opera menu, Montage, they have the 1876 burger right here. Guess what this fucking thing costs? $1,876 for a burger. $1,876 for a burger. Burger. $2,000. Fucking popcorn. $15. I don't know if you can see that. $15 popcorn. Fucking heirloom popcorn truffled. $15. There's a $2,000 burger at Deer Valley. That shit is absurd. That shit is absurd. Spoo's trying to break out and trade 57.25 on SPX. We're now cranking higher here on Spoo's breaking out from the hourly trigger. On trend, that should be top right there just so you can see it. See that right there? If your long calls, take it off. And look for a back test and squeeze higher. Leave some runners on if you want. Target. That yellow box right there. Bears getting squoze out right now. Trading 569.69 like your mother. My account is back in the green again.
17 states allow or propose crypto as a reserve asset. 16 moving towards pension fund inclusion as well, according to S&P Global. Crypto ETFs and regulations boost confidence in adoption. And
my account is now green. Even my options are green too. Back into green options. Woo! Yay, happy again.
It's possible for some Canadian cabinet ministers could go to Washington next week for talks.
Friday calls coming back. Monday calls coming back to life again. Yeehaw. Nice day trade right here, though, right? Great little day trade down there. Right? Nice little day trade down here, right? Turn around, get out of the way. Right? Remember that earlier today? No? Bears, close your fucking puts. Yay. Another one, big move right there. Another big move right there. Look for another move right there. Can we get one more pump here? How many pumps we got going here? We got one, 2, 3, 4, 5. Yeah, one more left. One more pump left usually. One more pumperoonie. Also note that on trend for the upside move, we have the rest of this up here. Just so you can see it. Hold on here. Trigger screen. Be nice to see supply back down there. That would be nice to see up there. Still on trend to trade 78. Bears can't put it together. Nothing's changed from last night's brief. 78 still the target. Just stretching it out a little bit longer. I am long 77 calls, 78 calls. Had some die yesterday, but I got some more expiring tomorrow. I got some more expiring on Monday. See if we can catch one of these closing fucking moonshots. Catch the unwind between now and Monday. Upside unwind in the market. See if the dealers can get unwound here in a meaningful way. A couple notes here. Goldman's Bobby Malavi on degrossing and duration. An interesting episode with many cross currents. One feature was the shift from a market that traded fundamentals to one that was trading positioning in P&L. The need to degross in this instance was largely driving by stops and triggers that catalyze a risk-off move. That meant that there was a domino event, a 4 standard deviation move for performance on a Thursday, resulted in a standard deviation move in flows unwinds on a Friday and so on. The knock-on impact was to asset prices. Stocks weren't trading on earnings expectations, sell-side estimate changes, or fundamentals in this window. But on flows, and whether we were in innings 1, 3, or 9 of the unwind, I'll post that in Discord. A market that was as driven by signal, flows, and impact as anything else, and where the cost of that signal increased exponentially. I view that degross as a mini example of a new theme around the value in trading, taking advantage of time over timing, leveraging the ability to move quickly and at scale rather than cheaply and slowly, and an overall example of the value of focusing on implicit costs and best execution rather than explicit costs and best price. Duration of the market. If markets used to be a landscape where bigger pools of fundamental capital drove asset prices over longer periods of time, that has now changed. This is what our discussion was about this morning. I'll read it to you again. If markets used to be a landscape where bigger pools of fundamental capital drove asset prices over longer periods of time, that has now changed. That is what I explained to you all morning. Are the buyers here? Are they not here? Is there $10 under the $1 asset price move or not? Are there 10 people with $10 or $1 bills, or is there 2 people with $1 bills, right? Do we have liquidity in the market underneath that asset price? And that's my question. Did we have that yesterday? We did not. We did not peek our heads up and over yesterday. That means that bulls are still scared to enter the market. Many more short duration and levered products driven by day-to-day activity and fewer long duration active pools to offset and or take advantage of the dislocations that appear in the short term. As one investor said to me, we are now in a world of small alphas amplified by leverage and encouraged to churn. Whether the duration of the strategy be 1 minute, 1 hour, 1 day, 1 month, it is increasingly not 3, 5, and 7 years. Investors are watched and assessed on daily, weekly, monthly, quarterly, and at best annually. To that end, people were long Tesla in 2025 are bad in the same way that people who owned Mag 7 in 2022 were bad. This duration collapse and or mismatch will result in a lack of depth and higher volatility around certain situations. We saw that in quarterly earnings and realized moves in 2024. We saw that in the summer, degross rotation of last year, and again in the recent March degrees. There's a few points to be made about this, that people are in for something specific, a trade, specific time period, and not to trust continuation, that you might not get it. People will take their money and fucking run and look for better value. And I'm in agreement with this. I'm questioning it myself this year. Can I buy the S&P 500 and leave it in for the full year? If I go back to all-time highs or near it, do I just have to exit and wait for the next big drop in the market? Same thing would be true for what? I just looked. You guys want to see something cool? I got to show you guys something cool that I looked at last night.
Telegraph reports that UK's PM Starmer opens the door to a trade war with Trump over tariffs. So Starmer has suggested that the UK could retaliate against tariffs imposed by Trump.
Note here, too, that I want to make a note to you here. We're at a 4-trigger cluster. We are making our way back to a hourly trigger, half-hour trigger, 1 and 5 minute trigger right now. We'll see if this holds for a giant upside squeeze while we figure this out. Note that just like that conversation I had to you, do not trust this. But if it does hold, we should squeeze balls off. This guy's conversation, I want to talk to you about this more deeply. I posted it in the Discord, but I want to show you guys something kind of cool here. I don't know how long this has been on, but let me show you something here if I can really quick. I thought this was kind of cool. Hang tight here. Let me show you something kind of neat. I don't know if I can do this here, but so this is Tesla, right? Sorry about this. Let me move this over for you guys. Sorry. Am I doing this wrong? I'm doing this wrong? Sorry about that. Okay, so this is Tesla, right? Let's go to a one-day basis. This is, you can probably do this elsewhere, but this is so simple. Oh, check this. Sorry about that. Let me delete all this stuff. Delete all. Okay. I want to show you something kind of neat here. Tesla versus another company. This is a new feature from Webull. If you've never seen this before, I used it for the first time yesterday. I did multi-dimensional comparison, and now I'm on Tesla. I'm going to bring up NVDA. So let's look at NVDA. We're going to visualize what this guy is saying. And can I make this bigger? I don't know if I can make this bigger, but what's really cool about this is you can show this over different time frames. 1 year. What's really cool about this is it shows you over. Let's start with a month.
I've posted the piece from the Telegraph on the feed.
Let's start with 1 month.
But do keep in mind, we have heard similar stories coming out from the UK, from the likes of the Sun.
So NVIDIA, Tesla. NVIDIA on net for the month, down 9%. Tesla, up 2.5%. 3 months. Tesla down 35%. NVDA down 17%. On year. On year, this is fascinating. Tesla up 56%. NVDA only up 21%. I think that's shocking. You would have been better over a year being long Tesla than NVDA. I bet you there's a lot of NVDA gang out there that's angry just reading that. 5 years. This is where the juice comes in, though. NVIDIA up
the points being referenced in
1,684%.
23 a.m. Eastern Time from a UK spokesman.
Tesla up only 700%. So on the time frame that you're looking at, you can make an argument for, is Tesla good or NVIDIA good? Right? You can actually do comparisons in here and see, and maybe even plot rotations in between these companies. If let's say you like NVIDIA or Tesla, or you like NVDA, you can look for these crosses here, or as they're bought and sold, or maybe your favorite ticker. Maybe it's GME, AMC, or what have you. Anyways, this is a comparison chart on performance, a dynamic comparison chart on performance on both of these tickers. I thought this was really neat. You can compare all their P&L stuff, their assets, their forward PE ratios, all that kind of stuff. I meant to talk to you about that earlier today. But anyways, on your own, if you want to do a comparison, a verse, click on multi-dimensional. And this could show you rotations as well. So an example being if you're, hey, are we rotating into TLT out of SPY, or are we rotating into both at the same time, or are we rotating out of TLT back into SPY? You guys will notice some correlation behind some of that stuff. It's a great correlation to rotation in and out of maybe sectors. Are we in utilities, or are we in financials right now? Are we in oil and gas, or are we in the S&P 500 right now? At any rate, Take a look at that comparison on Webull. I've got some tariff implications here. Nope, I spelled tariff wrong. Just whacking away. I spelled that right. Okay, all right, I did that right. GM number 1, Toyota number 2, Stellantis number 3. Ford's not so bad. Subaru's not so bad. Kia, VW. Actually, less tariffs on foreign producers. It's on U.S. producers that are producing outside of the U.S. I am fascinated by that. Here we go, right here. See if this holds. I am fascinated by what Carney said earlier in his speech, which he said Trump wants to make America number 1 again. To what end is the last part of this discussion from earlier this morning is to what end? And I was having a discussion yesterday with a friend, and I asked my friend, I said to him, I was on a phone call yesterday afternoon. I was on a few phone calls yesterday afternoon, so this person, there's more than one. I think I had 3 of them yesterday. But one of them in particular, we were discussing what is the end of the discussion? Why is the question? Why do you want to make or bring manufacturing back to the United States? Why are we introducing conversation about not just bringing manufacturing back to the U.S., better trade deals for the U.S., better producer or closer producers. It seems kind of like, why though? What's the end of this? Is it to make America great again, or is it because of an upcoming war potential? And we'll continue that conversation if we can. We're going to do that IPO tomorrow. And if we can fit in this conversation at some point this week before the end of the week, we're going to try to tie all of this into a greater threat with war with China. If that's a valid concern, is that something that we should be concerned about coming into 2026 and 2027? Is it just paranoia? Is it does it answer any of the other questions out there? Why are we breaking truces with nations and deals we have had since World War II? If you remember, we had a lot of World War I truces that were scrapped as well. League of Nations comes to mind as one of them. And why do you do those things? Because the situation may change. Why do you ask Europe to rearm themselves? Why do you have Blackwater taking over Chinese ports, right? If it's only to make America great again, why would you be saying we need Greenland, we need Canada, and we're going to invade Panama and Colombia? Why are we getting those questions at the same time as a trade war? It doesn't seem to connect the dots for me. So my ultimate question is, are we going to war with China? Either a Cold War or a gentleman's agreement, conventional war with proxies, right? We're arming who? Japan, Australia, Taiwan. We're reopening bases across Southeast Asia. And it's starting to walk and talk like a duck. Does it make it so? No, but we have to talk about connecting the dots for that future as well. So we'll have that conversation as well now, seeing as we're down at the end of this doom cycle. We'll try to have that conversation tomorrow if we can and just find out if that's real, fake, or whatever. You 100%, Mike. I'm with you, brother. Well, there's some parts of this, right? You've got the book, what? There's that one book that's the U.S. the next 100 years. I think it's called The Next 100 Years. I would ask all of you to read that if you can. I think it's called The United States the Next 100 Years. I have it. I'll grab it out of my shelf. And then there's also The Fourth Turning. If you've read that book, you know what they say, right? It's garbage, it's like pop garbage psychology, but there's an aspect to it called what? Self-fulfilling prophecy, right? And that is when you self-realize things that you read or think about. And then there's also some other things, right? The dollar, right? You know that since the beginning of time, sovereign wealth matters, right? I was on another phone call yesterday with someone else, and we were talking, the different person, and they were saying to me, think about the hegemony of the dollar. The hegemony of the dollar. When the dollar has hegemony, who pisses in a nice toilet bowl? And who pisses in a pot on the ground or a hole in the ground? That's an easy question to answer, right? When the pound ruled, who pissed in a pisser and who pissed in a pot, right? You can see we're not paying the WTO as of today, right? We're not sending any money in. We brought China into the WTO. Many moons ago, they wanted to form this quasi-capitalistic dictatorship, for lack of a better description. And the bigger question down the road and farther out in time is hegemony, isn't it? And whose dollar fucking rules? And are you willing to give that up or not? We'll try to address that stuff tomorrow if we have time. If we don't, we'll go over it next week, but it should make a good point of conversation because the trade war stuff is one thing, isn't it? You're like, okay, we're doing trade war. I get it, right? Make America great again. All right, yeah, I'm with you. Wait a minute. Now we're introducing what? We're introducing taking Greenland. Why? It's kind of like I described it as swinging once, but it could be anything. It's like think about this. Let's think about this. You're with your girlfriend. And how do I relate this to? Gotta come up with a new one. It's better. You're with your best buddy, and you bowl with him. You go bowling with your best buddy all the time, and you've never, ever, ever, ever brought up going bike riding in the summer. You guys just bowl together, and you bowl with him for a year. And you start thinking about, you know what? It's summertime, man. I bowled with my best friend every fucking Wednesday. Or no, every Friday night. I got a better one. So I'm bowling with my buddy for a year. Every Friday night we go bowling. Because I've actually done this. I have some experience with this. So this is easier. So we go bowling every Friday night. And one spring is coming around, and a guy comes to me and says, hey, man, we got beer cans sailing on Friday nights, bro. And I'm like, oh, I can't do that. I go bowling with my buddy. And so it's like, late winter, early spring. It's getting warm outside. My buddy's sending me pictures. Woo, having a great time, bro. And I know that bowling is important to my friend. If I were to go to my friend and tell him, hey, man, I'm going to go start fucking sailing on Fridays, fuck you and bowling, he's going to go, fuck you, man. Right? And I kind of want my buddy to go with me. He's my good friend. So if I was going to tactfully try to get my friend to come with me, I could bring it up, right? Hey, man, what do you think if we stop bowling on Friday nights just for the spring and summer and we tried out sailing? I got another friend that does it, man. Let me show you some cool pictures. My friend goes, fuck you, no, man. We bowl, bro. We bowl every fucking Friday. It's our fucking thing, bro. Can't you do that another day of the week? And you're like, oh, shit. Okay, nope. All right, well, a week passes and I break out some more pictures. I'm like, dude, check this video out, bro. There's women there. There's like beer, bro. It's free. That shit's gonna be no, bro. We can just like bring a case of beer, dude, and we fucking sail for free all night long. Look at these women, dude. They're wearing like it's getting warm, bro. They love people that are sailing, bro, way better than bowling. Well, all of a sudden, my buddy starts thinking about it more and more and more and more and more, right? And then I'm like, one day I come to him. Hey, man, I'm going to go sailing. Or I'm going to need those fucking minerals. And what would be the trigger for that? If you are possibly planning a war and that possibility came to light, you could say, hey, man, we talked about this 2 years ago. And I need those fucking that access, or I need those fucking expanded military bases, or I need those minerals or those metals right fucking now. And we already told you I was going to take it. Does that make sense? Chase, we sold the top on the show. Chase, we have it on video. We took profit, Chase, on mid-February. It's on video. What is wrong with you? Like, seriously. Nobody here was long in September till now. You were in the wrong place. We're down here buying the bottom. My God. Killing me, bro. Nobody was long in September. Nobody. It's a false statement. Unless it's you're reading shit in the wrong place. It's a false bullshit narrative. That's over the line, Cap. That's a good one. Yes, it is. You could literally replay the video for him like 30 times and he wouldn't fucking believe you. It must be AI, man. Stace, none of us were long, bro. We're all trying to buy bottoms, literally. Like we're all down here trying to accumulate, man. Like all of us. Nobody's upside down, bro. Nobody. Maybe a day trader or something, but nobody else is, man. We're all just trying to get long the market. The trade's dead, bro. We're close to the trade being dead. Promise you. You're on the wrong side right now, man. We're trying to turn the market up. God damn. Always the wrong side of the fucking trade. The macro is trying to get the market to turn up, not down. Man, even if we roll down, even if we jackknife down, we're trying to get long the market. We're looking for an entry. We're looking for big corrections. We're looking for crashes.
217 million.
Like literally.
68 million.
We all knew this last year, Chase. Chase, we literally get white papers that cost like thousands of dollars that tell us when to get long and when to get short. God damn.
Macro headline risk with Financial Juice Pro. Now $99 a year for our.
You should join the Discord. We'll tell you 3 months before it happens. God. MOC didn't hear. Oh, MOC, 760 million to the buy side. NASDAQ, though, minus 542 million. Dow 30 plus 224 to the upside. Dow looks really sexy right now, by the way. Mag 7, though, they're still selling Mag 7. Matt, so this is what this weakness is coming from, is Mag 7 shit. It's 4 p.m. right now. Don't forget, you're going to get some dealers helping you out after the bell here. Dealers are going to buy back. You guys got it in the brief last night. Explain the mechanics of them buying back all of these shorts as long as we're above a certain number. So even this weakness should go up in the overnight right now. Now, we hit our nice target right here, too. Hit our first target right here. We got one more target at 73 into the close. Yeah, I just posted the Nomura tariff implications for automotive companies in the Discord. Oh, yeah, you guys got to read 2 books. Ready? 2 books. Order them from Amazon, and we'll have a discussion about it. I can even wait to have this discussion. We read the Fourth Turning, and then I want you to read America in the Next 100 Years. Read both of those books, and we'll talk about self-fulfilling prophecy, and we'll talk about is the American empire at the end, or is it at the start? Are we teenagers or old men? And these guys posit that basically the U.S. is a teenager, and that they are going to fight for that hegemony, even if they lose. They're going to fight for it. And you can also see some of these things in, like, if you're looking at, like, Europe, the UK can attest to this. If Great Britain wanted to squash the American Revolution, they could have in a moment. But they were too busy with the rest of the empire to do that. But if you recall, when the UK, when Great Britain was trying to defend its hegemony, they did things similar to what we're doing right now. And when we were gaining our hegemony, we were doing similar things right now in World War I and World War II. So that's the question. Is this a fight for hegemony in the world? Yes or no? Bleeding into the bell right now, but I'm not too concerned about this yet. I expect these dealers to step right back in after the after hours and buy again. 7 minutes left. There might be a good 0-8 trade in here for calls. Trying to erase the whole move higher and get us back down to that 5,700 into this bell here. Remember, we've got options expiring here at 5,700. 2-date options getting more dangerous to hold into tomorrow and into Friday. I will check tonight and see if they're closing these options or not. 2-day 5,700 Ps. Huge magnet on the market. See if these are getting closed right now. Keep your eyes on the SPX 5700 chain if you're interested. Watch the ones that close today and look to see what's open tomorrow. These are very short-term put options. Tying the market up. Yeah, those are the 2 books you want to read. And we'll try to wrap up this whole conversation with that war question. Some people don't believe that. I don't know that I agree with it. Like listening to Carney today, he was implying that there is no war. But I do wonder if the behind the scenes questions are about war because all the other actions are pointing towards it. They just can't say it publicly. But the actions are speaking louder than the non-verb or non-words, verbiage words.
Any Greenland officials on my trip?
It's walking and talking and, looking like a duck. There's the 1 hour, there's the 4 hour.
Again, just keep in mind, U.S. Energy Secretary Wright currently speaking on Fox News.
This is where all the buyers are, right here. Where the bulls are at. This is where all the bears want to get paid below this. Bears angry. Come on down. Come lower than this. Print my poots. Remember, a block of this is going to end today. These expire today. Or probably half of them, I would think, expire today. I'm back down on 5,700 now. Or I should say this is 5,700 right here. This is exactly 5,700. Parked right on it. You can see the contracts changing hands right now. One minute left. We might buy some zero dates after this bell. Wait for me. Holy shit, they're expensive. 572s are 61 cents. Let's see what happens here. Going up. There we go. There we go. There we go. 61 cents, 67 cents. I got some zero dates for tomorrow. 572s. They went from 61 to 70. Now they're 70 cents.
GameStop shares closed down
72 cents.
Lower for the worst drop in 9 months.
80 cents before the close. Oh yeah, baby.
Australia TV
There's some good arbitrage here.
is on his way to visit the Governor General and may be about to call a national election.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
Let's see if they let this fucker go and start ramping. All right. I'll see all of you guys tomorrow at 4:15 p.m. If I can get a squeeze out of this by 6:15, I'm going to sell. But if not, I'm going to hold them into tomorrow. You guys.